There we go. All right, yo, what is up for everyone watching this on the YouTube replay? I hope you're having a great day. I just bought a new stock for the first time in a very long time, so I can't wait to share with you my new purchase. But before I show you that, let me do a quick portfolio update because the market is kind of struggling today. But I decided to take advantage of this and buy the dip and actually buy a new company. So today we are down 0.69% in our Roth IRA, which it's a lot worse than our other portfolios, but we have some defensive names like a McDonald's is keeping us up. They're up 2% on the day. It's actually our second largest holding. Here are all my stocks by total equity. And then here's my total percent change. If everyone knew, yeah, I'm about to cover the new stock I just purchased for the first time ever, literally minutes ago, right before the stream. And here's how the main indexes are doing. The QQQ is having a rough day, 3% in the net in the red. S&P 500's down, but it's good to see oil's down as well. It's not like oil's rising, so it's good to see at least oil's falling. But yeah, Nvidia's down 4, Apple's green though. And here's our Roth IRA. Our Roth IRA is actually holding up pretty decent compared to the Qs. You know, Qs are down 3%. We're only down 0.01% in this portfolio. Actually, we have some defensive names in here, like an HCA Healthcare. This is the hospital group, a Cavco, which does factory built home, and a Care Trust. This is actually a stock I just bought 2 more shares of. I'm actually about to buy another share of this company today. I'm going to transfer over the buying power from this account to my Roth IRA and buy another share after the stream. But yeah, basically this account is struggling on InnoData. It's down 10% on the day, but check out the past month that it's had. You know, I'm not too worried. This is just like a healthy RSI retrace. Stock is up 140% in the past month, but down 11% on the day. But here's where things start to get a little more interesting. Here's our Moomoo portfolio. This is called in the top left my buy and never sell account, because once I buy a stock in here, I legit never sell it. And we're in the green by $33,000, which means we only put like 17 grand into this account initially, and it's grown $33,000. And mainly that's from Comfort Systems. We're up 18K. Powell Industries, we're up now 1,000% on them. And if you're wondering how have we done so good in here, it's because we didn't sell or trim before today. Like most people, when they're up a 100, 200, 300%, they'll at least trim some, but not in this account. This is a total experiment. Hit the follow button if you want to come back in some time. We're legit never allowed to sell it. And one of our really defensive names, Coca-Cola Consolidated, the bottler, is up 5.6% on the day. So that's kind of offsetting some of our losses. But now let me get to what everyone's kind of been waiting for. The new stock I just bought for the first time ever. It's in my Webull portfolio. And here's how it's doing on the day. Just today, we're down 3.5%. Or 680 bucks, but still all time since inception, we are up 24%. But here's the most recent stock I just bought in here, and that is Netflix. Right after I do an update on here, we'll go deep dive into Netflix stock. I think this one's a pretty decent, like the risk reward is good. Now is not the time to go all in. It's not the time to, you know, if you wanted this as 5% of your portfolio, don't make it 5% of your portfolio today, but maybe it's decent to go ahead and nibble and make it like 1%. And that's what I did. I started it off as a relatively small position for me. Of course, nothing in this is financial advice. Always do your own research, but I'll give you a pitch on Netflix right after I share with you this portfolio. Check out, oh, and I sold Zoom. I sold out of Zoom to do that, and I deposit a little. We still got some buying power. I'm probably going to buy another share of food too, but yeah, look at AMD. We're down 8 or 400 bucks. They're down 8.3% of the day. Futu's down 4, Reddit 6, UiPath 5, Robinhood 6, SoFi's down 7. Some of the fintech software sector is really selling off again. Even the chip sector, but we do have some defensive names like a Progressive, the insurance company, is up 4%. Sprouts Farmers Market's up 2. AbbVie, which is a healthcare stock I've really been pushing. That one's doing pretty decent. AppLovin and Netflix. So now let me deep dive into Netflix stock and why I think this one's a pretty decent purchase. You know, it's a business model we can all pretty much understand, a subscription model company. And hey, what's good, everyone? Hope y'all are having a great day. Thanks for all the follows on the TikTok. So why is everything down? Yeah, we'll get to that in a minute. Rate cut hike expectations, a little uncertainty there. But Netflix, if y'all didn't know, they just rose prices by like $1.99 a month. I don't know about y'all, but I'm not canceling my subscription. Netflix really does have pricing power, in my opinion. Netflix expands integration across. I really believe in their advertising business that's going to grow. What is this right here? Acquires AI film company Interpositive. Netflix plans to release approximately 50 Japanese titles. Revenue, Asia Pacific revenue growth of 20%. Netflix declines to raise full year targets despite beating. Okay, anyway, let's go look at their actual numbers. So Netflix, subscription model company, it's all reoccurring, highly predictable. Analysts love subscription model companies, and this is a very profitable company. Even in a recession, if you forget to cancel the subscription, they still collect that high margin revenue every month, and they traded a 24 forward PE. What does that mean in English? That means they only trade at 24 times next year's net income. They currently trade at 26 and a half times net income, so it's good to see that it's going lower in the future. And check out the net income Netflix makes every quarter. I mean, they're easily making a couple billion, like 2.5 to 3 billion of real after-tax net income. They had a slight one-time adjustment this quarter because when they ended up not acquiring Warner Bros. Discovery, they received a free like $2.5 billion termination fee. So that kind of propped up their net income, because here's the number they actually made excluding that one-time adjustment. This is the before tax, before interest number. They made 3.96 billion. So after tax, it shouldn't be 5.3 billion. It's because of that one-time adjustment. But if you just look at all the other quarters, they're always making 2.5 to 3 billion of after-tax net income a quarter. So, and look at the free cash flow as well. They print over 2 billion of free cash flow a quarter. So historically, Netflix does massive share buybacks as well. Here's how you can tell. So the net income grew by 82%. So the net income growth rate is 82. What about the net income per share? So net income's up 82. Net income per share is up 86. How did the net income per share grow faster than the net income? Well, it's the per share part of the ratio. They bought back over 4% of the entire company in the past year because Netflix doesn't pay a dividend. They know the shares are cheap at a 24 forward PE, so they're just buying back their own stock. So that's why I think the risk to reward is pretty decent to nibble on the stock again. I just bought them for the first time ever. It's not one you'd want to go all in on. Like if you wanted this as 5% of your portfolio, definitely don't make it 5% of your portfolio today, but maybe make it like a 0.5 or a 1% position, something very tiny, where just in case this is the bottom, which, chances are it's probably not the bottom, but that's why you nibble. So anyway, that was my pitch on Netflix. Let me know. Hey, what's up, Sermon? He says, what are you buying in this market? Well, really Netflix. So I just bought Netflix, and here are the other stocks I really recommend are great buys. Not financial advice, of course, but Uber stock. I also just bought that one for the first time. Here's actually all my most recent purchases. So Uber, I'm only up 2.7% on them. The other stocks I like right now that are pretty cheap and they're still quality, Constellation Energy, that's your nuclear company, and CareTrust REIT. Actually, they're up 2% on the day, but they had a big downtrend this past week, and I just bought 2 more shares of them yesterday. This is a REIT. If you're a fan of real estate, they have a dividend companies. They have a 3.7% dividend yield. So let me give you a pitch. If you like companies that have a bit of a higher yield, check out this one. And I bet you're like, okay, high yield, it's probably not growthy, and is that yield sustainable? Well, this is actually a real estate investment trust, which means they're a REIT, and by law, these REITs have to pay out 90% of their taxable income in the form of a dividend. So let's go judge their, well, here's the dividend right here. Yeah, 85% payout ratio, very fair payout ratio, right in line at that 90% rule. They have a 23 forward PE, so they only trade at 23 times next year's net income, and they do triple net leases on senior housing care facilities, and these triple net leases are extremely high margin. Their gross margin was a 95%. So that's gross margin. How about the net margin after tax? 55% net margin. So for every dollar that comes in, they basically keep $55. But if you didn't know, you really don't judge a REIT off their net income because you still have to add back the depreciation and the amortization. You don't do that for normal companies, but you do this for REITs for a dividend payout ratio. Oh, and they have no leverage. They're one of the most under-leveraged REITs I've ever seen. They can pay off all their debt in 0.7 years. But check this out right here. Here's what you do a dividend payout ratio from, and check out this number right here. It just grows over time, pretty much at a record. So, oh yeah, and I made a video about them. I've made a lot of videos about this stock. So they made 90 million this quarter, and I like going into the cash flow statement to see how much exactly the dividend cost, and the dividend cost exactly 74 million. So as long as they're making over 74 million a quarter, this is the net income plus the depreciation, the amortization, they can afford the dividend. So let's go to their website as well. Just very last thing, I'll be super quick about this. So they're a senior housing care facility. They have an 81% dividend payout ratio. This is the funds from operations payout ratio. Net debt to EBITDA of a 0.6, so they can pay off all their debt in 0.6 years. And here are their actual properties. So they specifically focus on like skilled nursing, senior housing facilities with people with dementia. So, and it just seems recession resilient with the super high margin, triple net lease where they just collect the rent every month. They don't have to pay for any of the utilities. That's the cool thing about the triple net lease model. So let's check out some of y'all stocks. I apologize, I'm a little behind. I see Lerod says Now and Micron. Yeah, let's do Micron and then we'll do NOW stock or ServiceNow. That's a software company. So we'll talk about this one because I do know there's a huge memory shortage right now. Has anyone seen RAM prices, hard drive SSD prices? It's through the roof. It's 5x in just like a year simply because of AI, data centers taking up all the demand. And so there's actually a huge shortage, and Micron's the main beneficiary of that. And here's what makes it hard to be bearish on Micron. And again, the stock kind of trades off the sentiment around the whole supply chain. So if the sentiment, like if the supply chain starts fixing itself, then the stock will go down. I don't know if there's any specific news on why they're down 9%. I know Nvidia is down 5% on the day, so it might just be the momentum. But here's why it's low-key hard to be bearish on Micron. On a forward multiple, they trade at a 9.4, which means they only trade at 9.4 times next year's net income. Here's the actual net income projections from the analyst, from S&P Global Analyst. It's supposed to be $22 billion next quarter, $26 billion of net income the quarter after. They were still going to be massive EPS growth, and that's why you don't really judge them off a trailing 12 months PE. You judge them off next year's PE, and it's only a 9.4. So in 1 year's time, this stock will literally be trading at a 9.4 times net income. So I feel like that could stretch higher like that. This isn't really peak bubble, I don't think. This could probably still go up to like a 12, a 13 before it fully maxes out. So Micron surpasses 1 trillion market cap, becomes 12th most valuable company globally. Isn't that crazy? So DRAM prices reach record high. Q1 industry revenue surges 81%, with Micron holding 22.5% market share. So there you go. Huge market share, 22.5% market share. Yeah, Micron got clapped today, unfortunately. But look at this. If you look in the middle here, Nvidia's down 5%. Oops. Marvell's down 10. Broadcom below that is down 6. Oh, and look at SpaceX. So we have their ticker symbol. So they're trying to raise like $80 billion at a 1.77 trillion market cap. Do we get financials to judge? Oh my goodness, we do. Oh wow. Actually, we might look into this later. In 1 quarter they lost $4 billion. I don't like that. Elon Musk owns 50%. Oh my goodness, dude, he is going to be the world's first trillionaire because he already owns like a couple $100 billion worth of Tesla stock. Well, if he owns 48% of SpaceX and SpaceX is going to IPO at 1.77 trillion, 50% of 1.77 trillion is like 800 bill. Okay. Are you doing the SpaceX IPO? I am not. So first off, IPOs recently, if you didn't know, what happens recently is they rally up initially and then they like fall down. How do I get to the IPOs on Robinhood? See, Robinhood's okay. So here's the thing. If you look in the very middle of my screen, you see it says, I'm aware of the flipping policy. Investors selling or flipping shares within the first 30 days are restricted from future IPOs. So what they're saying is if you buy SpaceX before they IPO, you're not allowed to sell your shares for 30 days. And if you didn't know, the first 30 days are usually when the stock skyrockets. That's when, if you look at any IPO recently, it's always the first 10, 20, 30, or really 10 days, 20 days when it just skyrockets way up its IPO price. So anywho, so it's always tough to buy before the IPO. But anyway, it's really overvalued. I'm not buying the IPO. It could be a fun short-term swing trade thing, but let's do ServiceNow. Here is a really cool software company. If you didn't know, you've probably seen if you're in the market, software is a sector that is being super hurt right now because of AI. They're saying Claude Code, OpenAI, ChatGPT, you can vibe code away these certain services, but I don't think that's the case for ServiceNow. This is a really cool, unique software company. ServiceNow rallies with software following NVIDIA's AI chip. Okay, I don't know. Is there any other news? Bank of America reinstates ServiceNow with a buy rating, cites AI control tower as mission critical for enterprise AI governance. ServiceNow benefits from software sector recovery. Okay, well, anyway, let's go look at their actual fundamentals because they are impressive. These softwares, you make the product once and then you can sell it 1 million more times with no more like additional cost, But check out their revenue. This is what you want to see if you're going to own a growth stock with a high PE and no dividend. You want to make sure the revenue is growing and literally by the quarter, not just by the year, but by the quarter, the revenue hits a new record. So I'm quite impressed with just the bottom, this top line growth. Let's go check out the bottom line. So bottom line, they're already profitable. They're easily making 4 to 500 million of after-tax net income. Here's the before tax, and then after tax is slightly lower at 4 to 500 mil. So look at the gross margins. So 75% gross margins. Looks like the gross margin did fall 5% year over year. Looks like the net margin as well fell 16%. So that might be maybe why this one is well off its peak. Maybe there's a bit of margin compression right now in this competitive environment. I'm not too sure. But Morningstar says they're undervalued. Rapid AI monetization, continuous product expansion beyond core IT functions, and strong margin expansion potential will drive long-term value growth. But the one thing that does still make it a little tough is the forward multiple. So they trade at 52 times next year's net income. Like even on this massive dip, they're still trading at 52 times next year's net income. That is still that's still too expensive for you to like buy this stock meaningfully. So I'd still be very cautious with this one. Hey, what's up, MC? Hope you're having a good day. Hopefully that was kind of helpful though. Again, I am very impressed. Morningstar says they're undervalued and super profitable, great revenue growth, insanely good free cash flow as well. I forgot to mention that, like over $1 billion of free cash flow a quarter. But that 50 times next year's net income still makes it a tough buy, I do think. ServiceNow finna blow as a employee. Wait, what does that mean? Like I thought you meant like blowout earnings. Can you tell me more about IREN? What is this right here? I purchased about a week ago and it immediately declined. Yeah, so this one is a tough sell in my opinion. So what does this company do? They're in a very commoditized, highly competitive, money-losing industry, which is renting out chips. So what does this company do? To keep it very, it's as simple as how I'm about to say it. It's literally this simple. All they do is own a bunch of NVIDIA chips in a data center. And what do those NVIDIA chips do? Right now, most of the revenue is still Bitcoin mining. They're using these GPUs to mine Bitcoin. So still, even Q3 of 2026, 76% of all the revenue is Bitcoin mining revenue. But then they're getting approached by these cloud companies like Microsoft saying, hey, can we actually rent out the capacity? So instead of you mining, look at this. Iris Energy closes $3.6 billion investment grade GPU financing for Microsoft. Well, anyway, they got a partnership with some companies to rent out their GPUs to the cloud. But the bad part is this is a money-losing industry. If we look at the net income projections, this is what makes it a tough trust. Next quarter, they're supposed to lose 101 mil in net income, 114 million in net income the quarter after. And they've been missing on expectations. Notice this quarter, orange lines what the analysts expect. They expected 220 mil of revenue. They only did 144. In the quarter before, they missed on earnings too. So they are missing on earnings. And I just don't like money-losing businesses. And it's a highly competitive, a commoditized business. So Morningstar even says they're overvalued, highly uncertain long-term demand for cloud infrastructure, a subpar user experience compared to peers, and significant capital needs that could dilute shareholder require caution. So Iris Energy does the exact same thing that CoreWeave does the same thing that Nebius does. They all just rent out chips. So that's the part of AI I'm staying away from. I want the picks and shovels play. I want to own the company that's selling the GPUs to them. So I would rather own an NVIDIA, which only trades. This is why we're not in a bubble and it's so hard to be bearish. NVIDIA's only at a 20 forward PE. We're trading at 20 times next year's net income. So the next stock I wanted to cover, I had a few requests about this one, is CEG. And hey, what's up, Brian Paul? Yeah, we'll look at SAP. And hey, Larry. Yes, sir. Oh, real quick, for the new people in the stream, I did just buy a new stock. Someone asked. I'll just be really quick. I just bought Netflix for the first time today, 2-3 hours ago. So that was my most recent purchase. Bought them for the first time ever. It's not the time to go all in, but it might be a decent time to nibble. And the same thing goes for this next stock I'm covering. I genuinely believe, super not financial advice. None of this is not personalized financial advice. By the way, if you want to hit the follow button, I appreciate that. I literally sell nothing. I don't have a course. I don't coach. I swear, I sell nothing, no book, no course. Just on here giving my opinion. The only way to support me is to leave a like. It would mean more than a donation just to hit the follow and like button. But look at CEG. This is Constellation Energy. They own 33% of all the U.S.'s active nuclear reactors. I've looked at every nuclear stock out there that exists. This is the purest nuclear play. And I'm a shareholder, so I might be biased, but I got 15 shares and I'm up 24% all time. So I'm still up a decent chunk. But my pitch here is It's down 20% the past month, down 28% year to date. The fundamentals are too strong. I genuinely believe the next time they report earnings, like just wait for earnings, this stock will go up. But this is a golden buy, 5 to 10% lower. Like in my opinion, put CEG on your watch list if you're wanting exposure to utilities, the companies that power these nuclear plants. So they traded a 22 PE or 22 times net income. They traded a 21 forward PE, and they just had their highest ever revenue. Look at that revenue this quarter, up 63% year over year from the Calpine acquisition, and not just record revenue, but record EPS, record net income. So even with the dilution or even with the acquisition that they did, the EPS was still accretive. Actually, I want to go to their I would think they have a cool investor presentation right here. So they're actually in the US, they're actually not even just the US, I think in the world, they're the world's #1 geothermal company, world's #1 nuclear company. And oh, this is such an old presentation. What is going? Okay, here we go. Q1 2026 presentation. Here's some cool things. If you look at the very top here, base EPS growth of 20% plus from 2026 to 2029. And the growth outlook excludes a bunch of things. Like right now, we're actually a customer with them. Our natural gas bill is through them, and they're milking us. Because they're unregulated. This is an unregulated utility right here, but they literally own the world's #1 nuclear fleet. Oh yeah, here it is right here. Largest fleet of nuclear, natural gas, and geothermal generation in the US. So there you go. Pretty cool utility company that's very profitable. They are at a 22 PE. So really cool nuclear, natural gas, and geothermal company. Geothermal is a really cool thing. They own the geysers in California. They take the steam that comes out of these geysers and they make it turn a steam turbine. Then they pump cool water back into it, and the process repeats forever. All right, next up, how's it going? What levels of AAOI would interest you? Hey, what's up, KP? I'm a little behind. I apologize. I'm seeing a lot of stocks here. I really do apologize. Thank you to everyone that's here. I saw SAP. This one I'll be quick. Or I'll try and go quick. I'll only spend like 1 minute or so on each stock right here, just to try and get to everyone's. See Palantir and stuff. So here's SAP. This is like a European company, I believe. Actually, yeah. So let's convert the currency to USD from euros. So let's see how they're doing. They're actually really cheap at a 22 forward PE. Application technology support, core services. They print net income actually, yeah, easily making over 2 billion of after-tax US dollars a quarter. Let's see what's driving this. So they might just be falling because software is falling. So their cloud revenue increased 19%, with cloud ERP suite growing 30%. Free cash flow declined 9% due to a one-time litigation settlement. So there you go, one-time little adjustment on the free cash flow. Oh, there's news. No, there's no news. Anyway, I mean, decent little company here. I mean, a 22 forward PE, that's a good risk to reward. I don't see it really getting much cheaper than this, but it might just be falling because maybe they're not the best cloud company. I don't know. I mean, I have my cloud with AWS, Azure Cloud, Google Cloud, Oracle Cloud as well. There is. I don't own that one, but anyway, 22 forward PE seems pretty fair. Maybe it's their main software business. Oh, app name. Yeah, hey, I'm actually on a brokerage where you buy and sell stocks on. If you're interested, I actually have it linked in my profile, like bio there. It's a affiliate link, but brokerage called Mumu, linked up there. Okay, next up, let's do man, I don't even know which stock to pick. There's like a million stocks. Okay, we won't cover this one. We won't cover the small caps because if you look in the very top right, they're only worth $10 million. And do I really recommend anyone trust any meaningful amount of money in a $10 million market cap at an all-time low? No. It's a $10 million company that lost $5 million the most recent quarter, or half the whole company. And look what that did to their balance sheet. They have $60 million of liabilities and $2 million of assets. So whenever you buy a stock, I please say, just give a quick glance at the numbers. Like, if you just looked at this chart right here, some newbie investor would be like, hey, this looks really beaten down. Let me buy the dip. It's a $10 million company. Well, it starts to make sense. It's a $10 million company that lost $5 million net income, has no assets, $60 million of debt, and the revenue, they ran out of revenue. The revenue is only $100K. So it starts to make sense why that stock's at all-time lows. That's why I focus so much on financials, because it usually explains why a stock is either going up or down so much. So here's AAOI stock. Forget what this company does. So what's this right here? Applied Optoelectronics, opinions on NVIDIA, copper. What is this? So they're Optical. Okay, so data center and cable television. So that's two different businesses. So data center revenue though is growing quite nicely. It's at a record 81 million. Yeah, that's the highest on the whole screen. It grew 151% year over year. So they actually, yeah, check that out. Both businesses combined, revenue grew 51. They still lost money though. They're still losing 10, 20 mil a quarter. Balance sheet looks good though. I don't know about this one. Let's check out their website though. Okay, so they do lasers, optical components, optical transceivers. So this is the kind of stuff they're doing. Actually, their data center business, I bet this stuff is just being bought by data centers. So, you really, if you like this stock, you really just want to focus on this data center business, and it's what it's supposed to. It's up 154% year over year. After grew 10%. After grew 42%. So they're on a nice streak of growth, and I can actually see why this stock has had such positive momentum. It really looks like it's because of data centers, but you still want to be cautious because it looks like they are still losing net income. So one said, "What do you think of Nokia?" That one I'm not super excited about at current prices. That's actually a recent Nvidia investment. If you didn't know, Nvidia literally owns stakes in a lot of companies. Nvidia owns Intel, CoreWeave, Coherent, and then they own Nokia. It's 7.5% of their portfolio. Dang, they're down 12% on the day. But check out the rally, the momentum that they've had. Like literally 9 months ago, they were $4. Now it's $14. It's a 6, 7x in just literally less than a year. Let's see. And it's actually their AI and cloud business driving that. If you look at the very middle second line here, the second, number two, it says AI and cloud business sales increased 49%, generating 1 billion euros in new orders, significantly boosting profitability. So yeah, they are a European company, but we've converted the currency to euros to get a better idea. I still think it's a tough buy at a 43 forward PE, but I like what the analysts are expecting. They're supposed to continue to make a couple 100 million of net income a quarter. They're supposed to make 265 mil next quarter, 400 million the quarter after. So they're definitely net income positive, and there's going to be massive EPS growth. So look at their current valuation. They traded 82 times net income, but they're only at 43 times next year's net income. They're literally experiencing 100% EPS growth. So the PE gets cut in half over the next year. So they are really experiencing a lot of net income growth, which just justify this. But I do still think the risk to reward doesn't look great, even after this 13% fall at a 43 forward PE. But I like that AI and cloud business. That was up 49%. Good for them. All right. Do you not know about the photonics bottleneck? Yeah, they're saying there's like a million bottlenecks in the market right now. Like the grid, it's power, it's fiber optics, it's all this. All right. Next up, I see. Hey, how's it going? Rhonda, Harkin, sir, football, pew pew. I'm a little sorry, I'm so behind on the chat here. How down are we today? Yeah, here's a super quick portfolio update. Mainly my Webull portfolio is getting smacked. If you look at the very top, we're down 4% on the day. Open profit and loss though, we're up 24% all time since we started this account. But look at AMD. AMD's down 10%. Reddit's down 7, Path 5, Robinhood 8, SoFi 8, Ouster 16. Hit the like button. RIP my portfolio. And my Robinhood account's not doing too terrible though, because McDonald's is kind of holding us up. Our defensive McDonald's. Actually, it's cool to see our defensive names doing work. This is why we own them. We have McDonald's up 2.5% on a day where look at the QQQs. The Qs are down 3.37. Holy moly. So Qs are down 3.37. McDonald's is holding us up a little bit. And also, if we head over to this portfolio, we have Coca-Cola. They're surprisingly up 6% on the day. 6%, like straight up, no news. Well, it's like this is the Coca-Cola bottler, but I bought this one after their massive dip. I bought a little more of them. So anyway, let's get back to this stock analysis that you guys have. Of course, none of this is financial advice. And watch out for people impersonating me. I did just ban someone with my exact same username and profile picture. I promise I'll never DM you. I promise I sell nothing. I have no course book, WhatsApp, Telegram. I don't have coach, or I literally do nothing. Only way to support me if you wanted to is leave a like and follow. So next up, we got VRT, please. So this is an HVAC company. This is the company, and I love these plays, like the HVAC plays, the electrical infrastructure plays for data centers. They do the cooling down of servers. Specifically, they do water cooling. I don't know what this is, Smart Run. Anyway, so yeah, they do HVAC work, climate, heating, ventilation, air conditioning, but they're overvalued right now, but they deserve all the hype around them. They really do have impressive growth. Organic revenue, like this isn't from an acquisition or anything. Revenue's up 30% year over year. So revenue's up 30. Profits are up by 137% year over year. So revenue's up 30, net income, after tax net income's up 137. What does that mean in English? Margin expansion. This same time last year, they had an 8% net margin. Now it's a 14. So for every dollar that comes in, they now keep $14.72 after tax, which is an 82% increase from the previous year. Gross margins are up 12, net margins are up 82, free cash flow's up 156. Like, that's what you want to see. This is record free cash flow the company has ever experienced. Last quarter was nearly $1 billion. And look at the forecast of net income. In 2 quarters, analysts project 630 million net income. We look at the net income right now, it's never even been close to 630 million before. It was a record last quarter, 445. It's going to 630. So basically, there's still massive EPS growth this company is still going to experience. And that's assuming they don't beat on earnings. But the rough part is the 49 forward PE does make this one quite expensive. So I do have a big watch list here. If you're a fan of heating, ventilation, air conditioning, this is my watch list I've made. I love Trane Technologies. MCore's a bit cheaper. This one's at a 27 PE ratio. It's still done phenomenal, and it's still just as quality. So they do like manufacture off-site modular HVAC systems and deliver them. Carrier Group right here has a 45% HVAC rooftop market share. So for all the HVACs you see on rooftops, they have a 45% market share. Anyway, these Vertiv's in here, Modine, Madison Air. This one's a recent IPO. Dang, they're down 7% on the day. They own like 50 subsidiaries. Actually, I think I meant AAON. AAON is actually the company that has the 45% rooftop market share. Carrier Global is another climate HVAC company. Anyway. What the? Okay, yeah, no more pattern day trade. We know. Thank you, SEC. So my actually main holding, the bulk of my portfolio, 24% of all my holdings are in an HVAC company, ticker symbol FIX, Comfort Systems. They're my favorite HVAC company, and 12% of all their sales come from AWS data centers. And AWS and Amazon has massive CapEx. I believe in them. How long have you been live? I've only been live for 30 minutes. What's up? I'm going to be live for another hour. So, hey, what's up, everyone? If you'd like to hit the follow button. I try to stream every day or every 2 days. Thoughts on NVIDIA longer term with this price? Yeah, here's what I like about NVIDIA. It's so hard to be bearish. I genuinely believe, not financial advice, if you buy NVIDIA today, you should get 7 to 10% of your money back a year. Nothing crazy. It's still a tough double. It's from the law of large numbers, NVIDIA is a tough double simply because if you look in the top right, market cap is 5 billion or 5 trillion. Sorry, 5 trillion. If you buy a share today, for you to double your money, the market cap has to be $10 trillion. So from law of large numbers, it's a tough buy. But I think if you buy today, you'll still get S&P 500, like 8% of your money back a year. The valuation's cheap on a forward basis. They're only at a 20 forward PE. They're actually cheaper than all the Mag 7 except Meta. They're on a forward PE. They're cheaper than Google, Amazon, Microsoft. Only one that's cheaper is Meta at like a 19. So basically, they only trade at 20 times next year's net income. They have a 24% GPU market share. Check out the net income projections. It's on the very left, fiscal Q3 of last year, it was 31 billion. And next year of Q3, it's going to be 57 billion. There's still massive EPS, massive net income growth they're going to experience. NVIDIA's literally like collecting royalties. They call it the CUDA royalty. The revenue is 81 billion. On this 81 bill of revenue, they kept 58 billion on that. Last quarter is 42. Like if another company can pull off this net income growth from literally look at 2023. They were lucky to do $1 billion of net income a quarter. So 2023 they did $1 billion in net income a quarter, all the way to now doing 40 to 50 billion in net income a quarter, and that's what analysts are expecting from now on, over 50 billion in net income a quarter from literal S&P Global estimates. 21 analysts. So anyway, I'm a fan of NVIDIA. What are you using to show this? This brokerage I'm on? Yeah, if you'd like to get this brokerage app, it's actually a brokerage called Moomoo. You just type it into Google. If you'd like to get, it's a brokerage where you buy and sell stocks on. They ask for a lot of information. If you want to use my affiliate link, I actually have it linked in my profile bio there. And if you end up depositing $100 in my affiliate, we'll both get like a free stock, I think. Okay. Yeah, it should just be called financials. Do you stay away from high forward PEs? It depends, it depends on the growth they're experiencing. Like if they're just now getting EPS positive, it could make sense why they have such a high PE. So actually someone just gave a great example of that. ZETA. Yes, sir. Yeah, let's check out Zeta. This is a stock where their forward PE is going to look ridiculously high. Let's look at this. Yeah, look at this forward PE. It's 210. So most people would avoid this, but it starts to make sense when you realize, okay, this company, a year ago, or a couple years ago, they used to lose over 50, 80 million in net income a quarter. Now they've significantly narrowed their losses so much to the point where we're expected to continue to stay net income positive. We're expected to make 9 mil of positive net income. So basically, for the first time ever, they're just now getting EPS positive. So that could be one reason. This is a cool software company. They just acquired Marigold, which is an advertising company. Actually, check out the third line here. This is really cool. They're super customers, they call them. So customer basic expansion included a 19% increase in super scale customers to 189. So they have 189 super scale customers with their average revenue per user rising to 1.7 million, up 21%. So they have 189 people paying them 1.7 million per year. Crazy. So yeah, revenue growth is fueled 87 from new customers, 45 million from existing customers, and 55 million of additional revenue from the Marigold acquisition. So that's good. That's additional growth. So one thing I do like about this company is that they're doing acquisitions. They are issuing shares to do it, but I believe it might be EPS accretive. Hey, someone says Fluence Energy. Yo, if you have a stock, please give me the ticker symbol. I don't know what that is, but you know what? I'll type it in for you. Okay, it's FLNC. We found it. Yeah, give me the ticker symbol if you got a stock. I don't know usually by the name. So here's Fluence Energy. Dang, so this one is lower than their 2021 IPO. Let's find out what this company does. So revenues from energy storage. Okay, so this is a more commoditized sector, the energy storage business. There's a lot of businesses in on this right now. Let's see what they do though. Energy storage solutions, applications from utilities to data centers. So hey, yeah, here's kind of their like energy storage boxes. It's cool. We get like some pictures right here. So they have 301 energy storage projects. They're in 48 markets. So they have some good customers as well. Well, I've never heard of any of these. So they got Siemens. That's a good customer. So they got here, I guess, all their products. They got the Smart Stack, the Grid Stack. So yeah, energy storage solutions. And I think this one might be struggling because do they have a forward PE? They probably do, but it might be high. Or they don't. So look at this. They don't even have a forward PE, so they're not supposed to get net income positive anytime soon. So they trade at negative 878 times next year's net income. So yeah, if we look at their current net income, it's a little choppy. It is getting better though. Like they made net income that one quarter, but I guess the revenue, I don't know. The revenue's not too growthy, or I don't know. I just be careful with this one. Nothing's really blowing me away when I analyze this one. I know they've kind of been maybe taken over by Bloom Energy. They have this very like silicone oxide like storage solutions that last longer than theirs. Or let's see, solid oxide fuel cell based power energy storage. So they have this like thesis where it acts better. I forget, they used to have it like presented on their website where it was like something percent better than competitors, or I don't know. It's an interesting industry. I want to cry. Meta is hurting my portfolio. Yo, Emperor Penguin, I hope you're having a good day, man. Do you think AMD is down enough to buy or wait longer? I'd wait longer. Now's not the time to buy AMD, in my opinion. They're still at a 72 forward PE. It's too tough to buy AMD yet, in my opinion. But let's do Meta. This is a stock I don't think it's too late for. I think it's worth. Hey, we'll look at KD stock. What's up, Burner? Yeah, what's up, Anthony? A bit rough day in the market. What's up, Corpse? So here's Meta Platforms. I do own this stock, so I might be biased. Full disclosure. Here's my position. I'm up 15% all time still. I got 5.1 shares, but we're down 2.85% on the day. Meta's risk to reward looks super good. They're at a 19 forward PE, so they're only trading at 19 times next year's net income. The reason they're hurting so much is because of their AI spend, their CapEx spend. Oh, look, there's a lot of Meta repeatedly delays Muse Spark AI models. So yeah, Meta is spending crazy CapEx. They're spending now like 35 to 40 billion a quarter. That's what they just predicted for full year, like 40 billion a quarter. And they don't have a successful LLM like OpenAI, Gemini, ChatGPT, Claude Code. They're already miles ahead. So they're not really winning the LLM game, but they are spending it. Actually, they hinted they might even get into the cloud, but that's already a super competitive industry. But their main core business of Instagram, Facebook, Threads, WhatsApp, Messenger, all print money. Revenue grew 33% year over year. I love what they're doing with the Meta Ray-Ban glasses, the smart glasses. They have an 88% smart glasses market share. Now Google's getting into the smart glasses. Apple's getting into the smart glasses. Apple just said they're delaying their smart glasses till 2029. But yeah, here's the net income they're making. Meta makes 20 to 24 billion a quarter, and yeah, look, they're spending 33 to 40 billion a quarter. So they're spending more than they're making. So Meta actually has a net debt position for the first time ever. But that's not scaring me at a Meta. I think at this, like, look, they had a good beat. So they have literally 3.54 billion daily active users. Literally half the world is on a Meta app once a day. They just disclosed that the average Facebook revenue per year, or the ARPU of a Facebook user in the US, is $50 a year. So Meta makes $50 on average per year per US Facebook user. Isn't that nuts? And they're just now introducing ads to WhatsApp and Threads. And Threads is nearly in the same amount of daily active users as X. So let's do KD stock. I've not heard of this one. So Kevin Durant. All right, Kinedrill. This sounds like a Benadryl or something. Let's see what they do. They're a $2.5 billion company. Sorry, my Wi-Fi is a little slow today. I apologize. Hopefully that won't affect the stream later. But we're going to be streaming for hopefully another like 40 minutes to an hour if we don't have any issues. Okay, okay, there we go. Sorry. So here's Kinedrill. Looks like they had a massive gap down. They went from 23 bucks, cut in half, to $11. Let's see if we can figure out if that's justified. So, okay, revenue forecasts are not good. So the revenue on the left is, 3.8. It's going to fall to 3.6. So the lifeblood of the company, the revenue, the sales, it's going to go more negative. Look at that. The revenue is down 0.8% from the previous year. So it looks like there's no real look at that over time. There's no growth. Looks like the business might be slowly so the lifeblood of the company, the sales, it's kind of just declining right now, which is not really what you want to see. They are still net income positive, so that's good, but kind of the profits are down 73%. I don't know about this one. Looks like they're highly leveraged. Look, that must be interest. I was wondering why it's such a difference. So before tax, before interest is 171 million. I was wondering why the net income is only 70 million. Their tax rate shouldn't be that high. It's debt. Let's go see how much interest they're paying on their debt. That's in the income statement. Actually, that's not too bad. They're paying they paid 30 million of interest on their debt this quarter, but yeah, 20 to 30 million of interest a quarter. That's actually not too terrible, but that's still a lot. Well, I don't know. Nothing's really blowing me away, but the forward PE is cheap, so the worst might be priced in. Oh, KD is an IBM spinoff. Oh, that's cool. They're at a 7.6 forward PE. I wonder why would IBM spin off this company and not keep it? Huh. So information technology, let's check out their website. Maybe we can get a better idea of what they do. Rethink becoming AI native, help customers in every industry ensure their essential systems will work. All right. Hybrid cloud partner, information technology is their sector. Well, a 7.6 forward PE. So they only traded 7.6 times next year's net income. Yeah, they're supposed to lose net income next quarter, but then they make 56 mil. That's actually, the worst might be priced in, and it might be a fully bottomed. I don't know. What are some stocks to buy this week? Hey, Aiden, of course, not financial advice here, but here's what I just bought. I bought this stock today, right before my stream. I bought this stock for the first time ever. Netflix. At the very beginning of my stream, I did a long deep dive into this company. I think the risk to reward is looking really good on Netflix. Now is not the time to go all in. Like if you wanted Netflix is 5% in your portfolio, don't make it 5% today, but maybe nibble at like a 0.1 or 0.5 to 1% position or something. So let's do GFS. Is that like Global Financial Services or something? Global Foundries. Okay. Hey, what's up, Tengrika? Thanks for that gift there. I appreciate that. And hey, D's, remind me to get to CCC stock. And I'm so behind. What's up, football? Yeah, we got to get to Celsius and MG, CoreWeave. What's up, Luca? My Music. NVIDIA isn't a long-term buy. AMD, Broadcom. Okay, so here's Global Foundry stock. They're down 9.3% on the day, but they've had a massive rally. So they're basically where they were 2 days ago. So no big deal. They IPO'd a couple years ago. So what exactly do they do? So manufacturing services. So that is a low single-digit growth rate, and their technology service is up double digits. So that's good to see. When we combine the two businesses together, the revenue's still kind of growing a little. This is old data though. That's weird. Hmm. Yeah, why is so this data says 2024, so for some reason I don't have the most recent data. Actually, we do have the S&P Global data here, so net incomes, they're supposed to make at least 170 to 200 million in net income a quarter. So they surely have a forward PE. Oh, well, it's still expensive. A 50 forward PE. So trading at 50 times next year's net income. I don't know if I trust that. I wish I could give you better thoughts on this company. It says they're also in the semiconductor industry. Completes acquisition of Synopsys processor, no cookies. So they actually bought something off Synopsys. The acquisition establishes as a technology partner offering customers a software to silicon capability. Anyway, it looks like they're also into quantum, launches quantum technology solutions, investor day. Read the highlights. Okay, is there a presentation? If you're an investor in this stock, you'd probably want to go look through their investor presentation. Um, because to see what they actually do, because I don't know, find the actual financials here. But anyway, interesting stock there. Maybe they have a high PE because they're in the semiconductor industry. All right. What is that a ticker symbol? SEI? SEI coin ETF? What's the ticker symbol for that one? May I ask how you get the fundamentals tab? It should be on yours. It might just be called something else. It might just be called, you have to scroll through these things up here, but it should just be called that, like financials or something. Because I remember they just did an update and changed it from like financials to fundamentals or something. All right, so let's do, I'm so behind on the chat. I mean, let's do CoreWeave. So that's a big NVIDIA holding, one I'd be careful with. So, and actually same with Synopsys. We just looked at Synopsys. So here's NVIDIA's holdings. They own Intel, and CoreWeave is their second largest holding right here. And NVIDIA really, it's a circular thesis here. NVIDIA owns them because they're one of their biggest customers. CoreWeave spends a lot of money on NVIDIA chips because all they do is rent out NVIDIA chips. The bad part is the net income projections, and this is what makes it a tough sell for me. Like if I couldn't really trust a meaningful amount of money in this one. If you look next quarter, they're supposed to lose 660 million in net income. The quarter after, another 600 million. They lost 740 million this quarter. The free cash flow is ridiculously negative. Net income's ridiculously negative. They're leveraged. The liabilities are right at the assets. So, there is no forward PE. The way I normally judge a company is with the forward PE, like negative 24. So they're like so far away from making any sort of profits. And that's what I want as a shareholder, free cash flow and net income. That's your main metrics you want, because when they make free cash flow and net income, that's what they return money to you as a shareholder via share buybacks, dividends, investing in the future, buying new chips. But the fundamentals do scare me on that one. So hopefully that was kind of helpful there. I know it wasn't probably too bullish there. Hey, yeah, Tingrika, thanks again for the gift. Yeah, let's check out your stock. Oh yeah, we got to do PL. Remind me to get the PL stock. That's Planet Lab. So this is the uranium and nuclear ETF. That's really cool. I didn't even know this was a thing. Thanks for telling me. It's up good from its 2019 price. Let's see what its top holdings are. An ETF is just a basket of companies, and honestly, it's more safer than like individually buying a stock. And I'm actually going to put this one on my watch list. The people there really know what they're picking. Cameco's the best uranium company. CEG's the best nuclear company. BWX is like a nuclear technology company that's super good. Actually, they make even nuclear submarines. Actually, I want to see if I can go to their website right here. No cookies. Okay. So, actually, I don't even know why. I shouldn't even go on their website right here. Oh, yeah, check this out right here. Naval Nuclear Propulsion System. So, naval nuclear reactors, they've made, over 400 naval nuclear reactors. We've proudly manufactured nuclear components and reactors since 1950s for U.S. Oh, that's cool. Commercial nuclear power equipment, nuclear steam generators. Nuclear really is just a steam generator. They heat up water, and that water turns to steam. They use the uranium to heat up water, and that water turns to steam. Anyway, that's a sector I'm a big fan of. You can pick and choose your favorite stocks as well. I own CEG, Constellation Energy. After this, we'll do PL stock. Yes, sir. Even my teacher recommended us to invest in NVIDIA as a beginner for long-term growth bond compounding. Well, it's a safe stock at least. At least it's not one of the Ooh, someone said any robotic stocks you're looking at. Yeah, first off, Amazon, but I know that's not exactly like the purest play robotics company. But I have a phenomenal robotics stock after this to share with you. SYM. So here's CCC, Intelligent Solution Holdings. I've never heard of this one. Is Blossom Social App good? I don't think so. Most of the people on there just like shill covered calls. But yeah, in the top right, this company's worth $2.73 billion. So they're a software subscription model company. I love subscription model companies. It's all reoccurring, it's predictable, and it's up 11% after grew 11, after grew 11, after grew 8. So that's funny. But as we know, if we look at any software stock like a ServiceNow, a Salesforce, and Adobe, all these software stocks are really beaten down hard. So if we just judge them off their financials, though, I mean, this looks pretty good. The revenue's at a record this quarter, and the net income is a little choppy, though. So that might be a tough thing that the net income is still kind of choppy. But overall, if you average out the 4 quarters, they are still making net income every quarter, and they're projected to as well. So the forward PE is a 23. That's actually pretty fair, a 23 forward PE. You just want to be careful. I don't know much about their software, what their subscription software is. Look at the top middle. It says employees 1. Is that true? You know, if they have 1 employee, that might be true. That actually might be true. You know, I'm gonna put this one on my watch list just to investigate that a little later. But Anywho, software is interesting because you make it once and you can just infinitely sell it. Can you show your portfolio? Yeah, hey, I do that I've done that kind of a million times. If you want, check out the best way to support me is on my YouTube channel where I do like whole entire stock portfolio updates all the time. That's my most recent YouTube video. Did a huge 4-year portfolio update. So yeah, these are all I got way too many stocks to just quickly go over this. I got a Roth IRA, I got a dividend only portfolio, I have a risk on portfolio, I have a Moomoo portfolio. So yeah, if you go to the YouTube stream, you can kind of rewind it and stuff. My YouTube is called Nathan Robert. That's actually the best way to support me. It would mean more than donating money to me to just go subscribe to my YouTube channel because TikTok keeps giving me issues with For You page eligibility and taking down my streams and stuff. So I appreciate that. Any robotic stocks? Yeah, so the robotic stock I really like is Symbiotic. I've looked at a lot of robotic stocks like Rich Tech Robotics, Serve Robotics. Stay away from those two. They're really junk. This is the one you want to buy, in my opinion. This one has real revenue, real patents, and it's on a dip as well. So some people only like buying stocks on a dip. This one's on a dip right now. So out of all the robotic stocks I buy on a dip, this is the one I'd buy. Super not financial advice. But they have over 1,500 patents. This is a warehouse robotics company helping out companies like Walmart, Albertsons, Costco with their warehouse. And check that out. 60 to 80% warehouse labor cost reduction. 15% increased shipping trailer utilization, like at store restock labor cost reduction of 58%. So, and they have the customers to prove it. If we go to the shareholders, Walmart is their largest customer, and Walmart loves them so much that they decided to buy their stock as well. Walmart owns 12% of the entire company, and check out this revenue growth. You know, not just some robotic startup with a couple mil of revenue. No, this one did 680 million this quarter, up 23%. And no way, dude. Shout out to my friend. Oops, I don't even know what I clicked. Mike there on the YouTube stream, dude. He just donated $2 to say SCHE. Yeah, let's check that out. SCHE stock. So he says, what do you think about emerging markets like SCHE? So yeah, let's check out this ETF right here and see what it owns specifically. So Taiwan Semiconductor. I like picking and choosing my own international stocks, but this ETF right here knows what it's doing. I love Taiwan Semiconductor and Tencent. Baba's great. I haven't looked at some of these other ones, but fun fact, did you guys know Tencent? This is the company that owns Supercell, so Clash of Clans, Clash Royale. They own Riot Games, so if you heard of Valorant, League of Legends, they own that. If you heard of PUBG, they own PUBG and PUBG Mobile. They own 49% of Epic Games, which is Fortnite. If this was a US stock, I genuinely believe they'd replace Tesla as a Mag 7. Baba's growing their Baba Cloud by 40%. This is a Chinese company that owns AliExpress. Taiwan Semi is such a great company, man. Like, those are the ones I'd pick myself. You know, I just pick those three if I had to pick some individually. If you didn't know, NVIDIA, Apple, they just design their chips. Taiwan's the one that actually manufactures them. So NVIDIA is 10% of all their revenue. It's their biggest customer. Apple's their second largest customer. Anyway, yeah, that's what's cool about the emerging markets. And they usually trade at lower PEs. Yo, my techs are down. Should I sell? Yo, I wouldn't. sell out of great companies. I don't know if you're a day trader, swing trader, but I'm just a fan of buying and never selling. That's actually the whole basis of this portfolio right here. If you look in the top left, it's called my buy and never sell portfolio because once I buy a stock, I never sell it. And y'all want to see where this is my portfolio a year ago. This is a screenshot. Look at Comfort Systems at the very top. I was down 16%. Powell Industries, I was up 110. Amazon, I was down 2%. Amphenol, I was only up 3%. And then here we are today, looking a lot better. So you just got to hold through the volatile times. That was way back here. That screenshot was a year and 1 month ago. So actually, that's really this past year has changed my life in the market. All it takes is a short year. Look at this from 1 year ago exactly. This account is up $29,000, which is just ridiculous. So it's up 153 versus the S&P up 25. And mainly that's because I have never trimmed or sold before today. Like Powell Industries, most people, if they're up 100 or 200%, they'll at least trim or sell 1 or 2 shares. But no, I'm never allowed to sell or trim. Same with this position. I've never trimmed or sold. Because some of my biggest regrets are selling and trimming. If you didn't know, I sold all my Palantir at $11 a share. It's now like 150. Look at Robinhood. I sold 58 shares at 36 a share. Well, Robinhood today is $80. I would have made a lot more money if I held on to those shares. So some of your biggest regrets won't be losers. They'll actually be selling out of companies that end up being multi-baggers. Like Palantir, I'd be up like 1,500%. And I have other examples too, but I don't want to go into all that. But so if you want to follow, this is my experiment portfolio. I made it almost like 2 years ago. I just never sell stock when I buy it. I can in my other portfolios. Like I'll buy and sell stuff in here. I just bought a new stock today. Bought Netflix for the first time ever right before the stream. And this one's actually called my dividend only portfolio. I love being fully transparent. I go to every other stream YouTuber. They never share their total return on every stock. They never share what they're buying and selling and their total position and what their lifetime performance in every stock and their lifetime portfolio performance. And that's what I try and do different on the stream. And of course, I sell literally nothing. I have no course book. I promise. I'm just giving my opinion, not financial advice. Let's keep looking at y'all stocks. So Taiwanese fans here. Is that A. Royce? Dude, A. Royce. That's like a produced people. That's funny. People used to call me that. Okay, Microsoft. Do I know you is what I mean. Okay, Microsoft stock. Okay. This is actually one of my most recent purchases as well. I'm in on Micron right now, but I'm panicking. I wouldn't panic on Micron, although it is down. Oh yeah, Planet Lab. You know what? Let's go to Planet Lab. Then we'll get to Microsoft. I'm a little behind. I'm all over the place. Sorry if I don't get to your stock. I'm trying to get to all these. Yeah, no problem there, Mike. Thanks again for your donation. Why is everything crashing? We'll check that out, Japan. We'll look at Oracle and VOO and some of these stocks. So this is Planet Lab. Dang, they're down 25% on the day. This is because the stock is really overvalued before today. Because they really haven't ever made net income. Yeah, look at this. Here's why it starts to make sense why they fell 25%. Analysts were projecting them to lose 36 million of net income. They lost 138 million. They beat on revenue though. They did 94 mil of revenue, but so the revenue growth is fantastic. You know, record revenue this quarter, up 42% year over year, but losing 100 mil a quarter now, that's not good. But what's cool is this is the satellite data provider for Google. Their biggest customer is Google. Their biggest shareholder, the biggest owner of this company is also Google. Whenever you zoom, 10 years ago, it used to be really bad, but now when you zoom in on Google Maps, it's really high quality. You can really see stuff with much better detail. They have these Pelican satellites, geostationary satellites in space that collect this data. And I'll show you that. The shareholder, Alphabet, which is Google, is the largest shareholder. 9.9% of all the shares are owned by Alphabet, which is Google. So they're interesting, but those net income projections do scare me. So quick with Microsoft, this is such a safe buy. So the reason they fell down here, if we look at the stock, they went from 550 on the left all the way down to 350 literally in 5 months. They fell like 50% 5 months. Why? Because Microsoft is the world's #1 software company. Out of all the software companies, Microsoft's the #1. And they're saying Claude Code and OpenAI, whatever, ChatGPT is gonna hurt their software business. Here's the thing, though. Think of their software as like Excel, spreadsheet, Word, PowerPoint, all that. Just that business, just that software suite does 120 billion of annual revenue for them. So that software does 120 billion of annual revenue. Here's why I'm not worried, because if AI takes over, Microsoft is hedged as an owner of AI. Microsoft literally owns 29% of all of OpenAI and have a revenue share agreement. And if Anthropic and OpenAI take over, their cloud business will boom. That's another huge sector I'm extremely bullish on, the cloud. And Microsoft's cloud business also does over 100 billion of annual revenue for them. It doesn't even mention their more personal computing businesses, which is Xbox, that's Minecraft, that's Activision Blizzard, which they bought. They own so many other things that, like, this is like an ETF in one. They have a better credit rating than the US government. They're supposed to make 32 billion net income next quarter, 35 billion the quarter after. And yeah, their CapEx spend is high. You know, they spent 27 billion this quarter, 22 billion, 34 billion, which is basically all their net income, because they just make over 30 billion in net income a quarter. So they're basically spending all that they're making right now and not retaining any money. So they're not doing any buybacks right now, but that's okay. Microsoft, I want them to invest in their cloud. I think their cloud growth rate is like 40% now. Let's see if there's any specific news. Yeah, their Copilot's doing good. Microsoft cancels Claude Code subscription. GitHub. Oh yeah, they own GitHub. What's that? LinkedIn. They own LinkedIn. I could go all day about Microsoft, but that's a Mag 7 stock. And very last thing, the valuation's cheap. So even though they've rallied a little bit, here's the cool thing. Microsoft's only at a 22 forward PE, meaning they only trade at 22 times next year's net income. That seems fair to me. Yeah, here's their subscribers. So they have 82.5 million premium subscribers for their Office 365, and here's their cloud. Anyway, super big fan of Microsoft. I am a shareholder, so I might be biased. And yeah, speaking of Microsoft Cloud, so the number one cloud service provider is AWS. The number two market share cloud provider is Azure Cloud, Microsoft Azure Cloud. Number three provider is Google Cloud. And number four is Oracle Cloud. This is Oracle right here. When you buy Amazon, Microsoft, or Google stock, you get exposure to cloud, but that's like that's a portion of their business. It's not like a pure cloud play. Oracle, on the other hand, is a pure cloud play. 90% of the revenue is just this cloud business, and they have a backlog like crazy. They have a $400 billion backlog of orders. And that's how they're justifying their CapEx spend. There is a money problem on Oracle right now. They're in a leverage problem. They're issuing crazy debt. They have 120 billion of debt. And look at this. They invested 20 billion this quarter. They only make, and this was a one-time adjustment, they didn't even actually make 6 billion that quarter. They only make around 3.5 to 4 billion of net income a quarter. So they're spending double, if not triple, quadruple of what they're making. So they're having to issue a ton of debt. And look at that does to the free cash flow. I mean, negative 12 bill of free cash flow, negative 10, like super negative free cash flow numbers. But they do have the backlog to support it, because like 200 billion of their backlog is literally just from OpenAI. So Morningstar says they're undervalued. Soaring demand for AI training and inference workloads driving Oracle Cloud infrastructure expansion, combined with sticky mission-critical database retention, will drive long-term value growth. There you go. That's what Morningstar says. And yeah, look at what was the forward PE? That's more expensive than, it's actually technically Oracle is more expensive than Amazon, Microsoft, and Google, who are bigger market shares. They're at a 36 forward PE. AWS, and Amazon, they're at a 30 forward PE. Google's is at a 28 forward PE. Microsoft's at a 22. Microsoft's a great one, I think. I'm so behind on the chats. Just please forgive me. What site is this? Oh yeah, hey, yeah, this is a brokerage. It's an app. If you'd like to get it, I have it linked in my profile bio there. It's actually an affiliate link, but you can just type it into Google or the App Store. It's a brokerage called Moomoo. But if you sign up with the link in my bio there, we'll both get like a free stock if you end up depositing $100, like a little affiliate link. But don't feel pressured. So here's Celsius right here. This is an energy drink company. They have a 28% energy drink market share. Monster's number one. They're number two with their new family of brands. They recently acquired Alani. If anyone's heard of Alani before, I like that one. And they also acquired Rockstar Beverage from Pepsi. Well, Pepsi gave it to them for free. So they own Rockstar Beverage, Celsius, and Alani. So here's the profits they're making right here. They really are really profitable. They had a one-time adjustment. You see Q3 right here, it says they lost 61 million. They didn't actually. They actually made 150 million. They had a one-time termination fee of moving their distribution from their old network to Pepsi. So basically what I'm trying to say is you don't judge them off their current PE. You want to judge them off next year's or forward PE, and they're only at a 17.4. So they only trade at 17.4 times next year's net income. That's starting to get like cheap. Like I don't see it going much lower, but I also have an explanation on why they're on such a downtrend in a minute here. And Morningstar says they're undervalued. So their strategic expansion through their PepsiCo distribution partner and demographic diversification with Alani acquisition will drive long-term value growth despite a highly competitive business. So yeah, if we look at Celsius right here, this trend does not look good. And I think it's following just the whole consumer package industry. Like look at a General Mills. They put food on the shelf as well. I get they're more beverage oriented, but like a Campbell soup as well, CBP. So the Campbell soup, which owns like Goldfish and a bunch of stuff. Look at their chart. They're massive down bad. It's actually not even just them. It's also like the restaurants, the QSRs. Look at Wendy's, RIP Wendy's. Did you know if you bought Wendy's IPO in 1997, you're down over 50% on your money? Wendy's is lower than their 1997 IPO by 50%. They're in their 2008 crash. You're going to a charity when you go to a Wendy's, sadly. So I feel bad for all these food stocks. And if I were to buy a food stock on a dip, I actually would go with McDonald's. And that's actually what I've been doing. See, the past 3 months, they're down 16%. I actually just yesterday got a big dividend from them. It just went to my cash, but all these little negatives right here, that's when I put money into McDonald's. The plus is the dividend right here. So I just received a $37 dividend from McDonald's. If you didn't know, I make under $48K a year. And if you didn't know, this is my taxable account. If you make under $48K a year, long-term capital gains are 0%. So whenever I received that $37 in qualified dividends, it was actually completely tax-free. How do I know? Because I do my taxes and I just did it, for the past 2-3 years. So literally, if your income is under $48K and you receive a qualified dividend, even in your taxable account, it's completely tax-free. And the same goes for selling a stock if you owned it for over a year. So I've owned all my Google for over a year. I'm up 126%. I could sell all this $3,600 of profit right now, completely tax-free, even in my taxable account right here. I have a Roth IRA. This isn't a Roth IRA. The taxes favor the low income if you're in the US. So if you make under 48K, you hold a stock for over a year, all your gains are tax-free and your dividends are tax-free. Isn't that nuts? So here's a hypothetical scenario for you. And I was kind of teaching this earlier. Let's say you have no income. Let's say all you have is a $500,000 portfolio, no other context. Let's just say you have a $500,000 portfolio that pays you $48,000 a year in dividends. Let's say you own McDonald's and it pays you $48K a year in dividends. That is completely tax-free no matter the state, and it's not taxed on the federal level. So you literally get all the $48K completely tax-free, and that $48K has to go up every year by law with inflation. So in next year, it'll be $50K and then $52K and then $55K. So maybe by the time you retire, it'll be much higher too. All right, so let's keep going here. Sorry, I kind of went off on a tangent there, but I just think that tax is cool. Someone said IBM. So IBM is this quantum play. The government just did this CHIPS Act and literally gave and took investments into quantum companies, gave them money. So the government literally gave IBM, or they invested $1 billion into IBM. They invested like a couple $100 million into RGTI and QBTS and Infosys and all these other ones. Whistleblower accuses IBM AT&T of concealing foreign cyber attacks. No additional details about the nature of hacks, the whistleblower identity, or company's responses were combined. Okay, that could be no big deal there. Anyway, yeah, this is a great dividend growth stock as well. If you look at the yield, if you buy a share right now, you're getting over 2.4% of your money back just in a qualified dividend every year. And check out the multiple. I mean, this seems pretty fair. They're 27 forward PE, so they only trade at 27 times next year's net income. That's like an S&P 500 multiple. I don't think that's peak bubble, peak valuation. But one reason why, if we kind of ignore the rally the past week from the government, that's basically from the government, this reason they've been on a decline is because they're mainly a software company. And if you look at any software stock, you look at a Salesforce and Adobe, a ServiceNow, half the revenue is software, they're really beaten down. But this quantum business could be a nice little tailwind. And that's in the market overreacted for sure this past week, but they're having a little healthy RSI retrace, we'll call it. And at a 27 forward PE, it seems fair. Say that again if you live in the US. Basically, look up long-term capital gains. Long-term capital gains, if you make under 48K, is 0%. So if you make under 48K, long-term capital gains is 0%. What is taxed at long-term capital gains? Dividends. So all the dividends I receive from all these stocks right here are completely tax-free. Also, if you own a stock for over 1 year, that's now taxed instead of short-term capital gains because you own it from 1 year, it's now long-term capital gains and it's tax-free. So even in my taxable account right here, since I make under 48K, if I sold all my Google for a $3,600 profit, it'd be completely tax-free because I've owned it for over a year and I make under 48K. Which sector is up today? Like the defensive stocks, like the staples, like a Coca-Cola Consolidated. Stocks like a McDonald's was up on the day. This is why I like these defensive stocks. I own McDonald's as my second largest holding in here. They're up 2.24% of the day. And in this portfolio, what was green on the day is like an insurance company, a progressive stock. Your recession resilient, grocery stores like a Sprouts Farmers Market, a utility, the healthcare companies, AbbVie. The defensive sectors are what's up today. What's up? What's your thoughts on the SpaceX IPO? What's up, Chill? Yeah, I'm actually not interested in it. And here's a super quick thing about the SpaceX IPO. Usually with IPOs, the huge rally happens within the first 10, 15 days. But if you didn't know, look at the very middle here. I'm aware of the flipping policy. Investors selling or flipping shares within the first 30 days are restricted from future IPOs. If you buy before the IPO, like if I locked in money right now, you are not allowed to sell those shares for 30 days. But the thing is, in the first 10, 20 days, that's when the huge rally momentum happens. Like every IPO recently has done that. What's the Cerebras one, or is that CBRS? Every IPO recently, it rallies like crazy on its first couple days. Like Webull as well. And then they fall like crazy. So, yeah, you want to be aware of that. Like here was the Webull IPO. This one was crazy. The IPO rallied up and then anyway. Ooh, I see some good stocks here. Rotation out of tech into precious metals today. What's gold doing? IAU is the commodity of gold. Gold is actually down 3%. Wow, dang, look at that downtrend on gold. What do y'all think? Is it time to buy gold yet? The thing, gold doesn't really offer a yield. So that's why if I wanted a gold play, I'd actually pick out RGLD. It kind of, look, we just looked at the price of gold. This chart basically follows exactly what gold does, but this is actually a gold royalty company. And you get a dividend. So you get a near 1% dividend that they raise every year. They're only at a 16 forward PE, which means you only trade at 16 times next year's net income. Check out the margins on this company. They had ignore that one-time adjustment last quarter. This is their net after-tax margin. Historically, they always run it like 50% plus net margins. So, gross margins, crazy too. So it's a royalty company. All right, what's your thoughts on, oh wait, let me get to, gosh, I'm so behind. Azrael says CRS. Which of those apps do you like the best if you had to choose one? I'd choose Moomoo. The one I'm on right now, this is the most useful, lowest fee, best brokerage in my opinion. And actually, if you'd like to get this brokerage I'm on right now, I have it linked in my bio profile. It's an affiliate link, but you can just type it into Google. It's called Moomoo. But yeah, it's linked in my profile bio there. Okay, so here's Carpenter Technology, 24 bill market cap, new all-time high. Wow. Well, pretty much if we zoom out. So congrats if you ever bought this stock. You're definitely up on your position. So they do specialty alloy operations, up 15%. That's actually the highest growth rate on the whole screen, the 14% year-over-year growth rate. Highest growth rate on the whole screen. So it looks like the growth is back. Oh, wow. That's margin expansion. So revenue grew 11%. So the revenue is up 11. The net income is up by 46. What does that mean in English? Net margin expansion. Net margin went from $13 to $17 or 17.2. So now for every $100 that come in, they keep $17.20 after paying taxes. So what are the future forecasts? Yeah, net income is still going to be good EPS growth. I wonder what alloy they mine. Metal fabrication. What specific alloys? Is it like steel or like, looks like they may be carbon fiber or maybe stuff that's used. Uh-oh. No, don't do that. Don't copyright me. Okay, thank you. Aerospace, transportation, they're in a lot of different industries. I'm trying to find what specific high temperature alloys, nickel, copper alloys, magnetic electrification. Just, these are all like metals that are used in semiconductor components. So I can kind of, oh, they're already on my watch list. I can see why they're at an all-time high. It looks like it's basically like the picks and shovels play. Semiconductor equipment need these metals. So MasterCard and Visa are up today, so is Berkshire Hathaway. Oh yeah, look at so Berkshire Hathaway, this is an S&P 500 alternative. So it's just basically an ETF in one. Historically, this gives you like 8 to 10% of your money back, just like the S&P 500. And they own so much stuff. They own Geico. These are the companies they fully own. So they fully own Geico, which that does over 100 bill a year. They're in manufacturing. They own McLane, Pilot, the gas station. They own BNSF Railroad. And then Berkshire Hathaway owns stakes in a bunch of different companies. Here's what they own. They own 21% of their holdings are in Apple, then American Express, then Coca-Cola, Bank of America, Google, Chevron, Oxy, Moody's, Kraft Heinz. So yeah, that's their actual portfolio. What's weird is they just bought like an airline in Macy's for the first time. Kind of weird. Hey, what's up, Bogdan? He says MicroStrategy. Crypto's been struggling. I guess here's BTC overlapped versus MicroStrategy. Usually MicroStrategy is like a slightly leveraged Bitcoin. So whenever Bitcoin goes down, MicroStrategy goes down more. As you can see, they were kind of coiled up together back here on this sort of the chart, but then MicroStrategy falls more. Basically, what does this company do? Strategy reports 11 billion unrealized loss on Bitcoin holdings, faces liquidity pressures from preferred stock dividend obligations. Strategy sells 32 Bitcoin, first disposal since December of 2022. Oh man. Saylor attributes Bitcoin decline to capital rotation from AI sector, cites 4.3 billion Bitcoin outflows. I can now start to understand why the stock is on a decline more than Bitcoin. So here's what this stock does. Basically, they issue shares. So if this number is positive down here, this means they either issued shares or issued debt. So they issued 7.15 billion of either debt or shares. It's always shares. So they literally dilute the life out of you, literally issuing 5 to 7 billion of shares a quarter, 18 billion that quarter. And what do they do with it? All that money? They buy Bitcoin with all that money. So I believe they own 3% of all Bitcoin that exists. They own 3% of all Bitcoin. Strategy deposits 411 Bitcoin into Coinbase. All right, so the thing is, they have this thing called STRC, which I don't trust. Look at it's decoupled. I have been predicting this. I told people this on my Discord. This is gonna depeg again. The point of this asset is supposed to always stay at $100. It's supposed to always stay at $100, and it's supposed to give you a 10% dividend yield. And just like I thought, they're having to sell Bitcoin to sustain the dividend. It's not a trustworthy dividend. Anyway, I'm kind of staying away from MicroStrategy and STRC. Hopefully that was kind of, I didn't mean to be too bearish there, but yeah. So Sheldon says XPEV. What are your thoughts on it? This is a Chinese ADR, basically Chinese Tesla. They make these. Oh no, actually, I'm thinking of a different company. I don't know. Well, let's see. XPeng delivers 32,000 vehicles in May. Flagship GX model receives 25,000 orders within 12 hours of launch. Mass production of China's first developed robo-taxi. Wow. Okay. Let's go look at the actual fundamentals. So we've converted the currency because this is a Chinese ADR. We've converted it to US dollars, their currency. And it's good to see that they made net income last quarter. They made 55 million this quarter. They are still losing money every quarter though. Looks like the revenue, lifeblood of the company, the revenue fell 13%. And net income losses declined by 182. So I know that, these Chinese electric vehicles are very commoditized, but yeah, 32,000 vehicles delivered, no forward PE. Morningstar says they're reasonably valued. Leadership in proprietary autonomous driving tech and expanding export mix offer competitive differentiation, intensifying price competition from the mass market NEV segment, and uncertainty surrounding national subsidy policies warrant investor caution. So I still would be careful with that one. Yeah, even Tesla's struggling in terms of their car business. Their margins are crushed. Tesla, their margins, I don't know how Tesla's doing so good. I think it's just propped up on momentum in the SpaceX IPO. But basically, Tesla's margins have been, crushed from what they used to be. In 2022, respectable, great 15, 17% net margin. Great margins on Tesla. How about the past year, though? 2%, 5%, 4%, 3%, I don't know. Okay, let's keep look. I would stay away from Tesla stock too. I know that's not the Thoughts on making Meta one of my top positions? I think it's a good addition to a portfolio. Um, I'm up 15% on them. They're at like a 19 forward PE. I would, it's a good as a decent sized position. I trust a decent amount of money in them, decent chunk of my portfolio. More so than like a small cap. Yeah, yeah, I have a lot of trust in Meta. Although they're spending a lot on CapEx and AI, I trust them. So yeah, someone's been saying Micron a lot. Let's go to Micron again. So Nvidia's down 5% of the day. Like Taiwan's down 7. Like all the AI stocks are down. I'll show you this. Look in the middle of my screen. Micron's down 9.5. Nvidia's down 4.7. Marvell is down 10. Broadcom is down 5.5. So it's like a AI sell off. But if we just zoom out, I mean, honestly, this looks like we're just having a healthy RSI retrace. These dips happen all the time. There was a dip here, a big dip here, another dip here. So here's why it's hard to be bearish on Micron. Here's why I wouldn't be like too worried. You definitely don't want this as a meaningful size position, but look at the forward PE, which means forward, or what's the multiple of next year's net income? They only trade at 9.3 times next year's net income. And here the actual net income forecast. They're having such massive net income growth. Again, this is your memory play, your RAM play, your SSD hard drive play. The demand is being taken up by data centers, causing a huge supply shortage, and now there's massive pricing power. And look at the net income. It's going to go from 3 billion on the left to 26 billion on the right. So there's still massive EPS and net income growth to the point where they're only trading at 9.4 times next year's net income. I don't think that's peak bubble, peak valuation. It could probably max out and stretch up to like a 12, 13, 14 before it maxes out. So I wouldn't be crazy worried. Same with Nvidia. Nvidia's super cheap enough. Like they're at a 20 forward PE or 20 times next year's net income. Just seems so fair. Duh, yeah, buy the 2x leverage Micron? No, I actually do not recommend that. Don't buy that. So Maker says AMTM could be the next Palantir. Well, let's check it out. And then we'll look at we'll look at United Oil and Gas. Is that USO? What's up, Treb? Yeah, oil is down on the day. Or actually, super quick note about oil. If you look in the market today, the Qs are down bad. QQQ is down 3.5. You'd think, is there some oil shock, Strait of Hormuz fear? No, oil is down 3% of the day as well. So, I mean, that's kind of good if oil's down. But yeah, Qs are down 3.5, SPY's down 2. So anyway, here's Amentum Holdings. They gapped down on earnings back there, and they've kind of just downtrended ever since. Let's see if we can figure out what happened here and what did they do. So Global Engineering Solutions. So that might be why that business actually declined 6.5% year over year. And their digital solutions, that one improved by 9.5. So when we combine the two businesses together, revenue still declined overall 0.37%. But they did make good profits. Or actually, technically, this quarter was the most profitable quarter they've ever had. Huh. What's this American Securities LLC? So Amentum Holdings, do they actually look at the net income forecast? This is really good. Net income in 2 quarters is supposed to hit 100 million of net income in 2 quarters. And yeah, we haven't seen 100 million like ever on this company. So yeah, there really is still a lot of EPS growth they're going to experience. So I bet the forward PE looks decent. Yeah, 16 forward PE. So this isn't a Palantir as in they're not growing like Palantir. Again, negative organic revenue, like revenue's down 0.4%, the lifeblood of the company, the sales. And if we look at a Palantir, how's Palantir's revenue growing? Well, it's a little different. Organic revenue's up 84 and net income grew by 302, which means margin expansion, a 53% net margin on Palantir. I could spend a long time pitching Palantir. This one's such a good company. Half the revenue comes from the government. Government revenue growth rate is growing, up 76% year over year. Commercial revenue is up 95% year over year, even faster. Palantir is a fortress balance sheet with no debt. The free cash flows at a record. There's a reason investors love Palantir. They have a absolute fortress balance sheet and phenomenal growth, but it's overvalued. Hey, Louise, shout out to member Louise. I hope you're having a good day, man. What's up? If you got a stock you want to look at, definitely let me know. But yeah, oil's definitely still up big from January. In January, 70, 65. Now it's 132. And can we look at like Brent prices? That's like the Western blend of. Okay. All right. Why are most stocks down 10% if the S&P is only down 2%? Well, that is because the S&P 500 is diversified into many sectors. Although it is tech heavy, look at this. Did you know healthcare is 8% of the S&P. Utilities are 2, real estate 2, energy 3, industrial 7, cyclical 9.6, and we have some defensive stocks that are up on the day. Like in my portfolio, McDonald's is having a great day. McDonald's is up 2.4%. It's made me $128 today. And if we look at a Coca-Cola Consolidated or Coca-Cola, they're up 6% on the day. And if we look at the main Coca-Cola company, they're up 4%. So it's like these defensive names are probably holding up the S&P more so than the tech-heavy Qs. That's why I like having a diversified portfolio. Oh yeah, look at this portfolio. I have some defensive sector like Progressive. It's an insurance company. And AbbVie, it's another healthcare prescription company. I love AbbVie. So, okay, let's see. I bought more SoFi today. Hey, shout out Louise. Let's look at SoFi real quick, and then we'll look at hey, what's up, Michael? And I see another says Intel stock. We'll do Intel next. Okay, Intel next for sure. I got you. That's a big Nvidia holding, and then we'll look at IoT. Sorry if I'm behind. Technically, Micron could double or triple, and forward PE still wouldn't be bad. Yeah, Bluefy. That's what. And same with Nvidia could double like that. It's hard to be so bearish on these companies. So here's SoFi Technologies. This is one I'm really bullish on. It's $15.90. Actually, also, yeah, here's my position. I'm down 7.3%. Look at the top. I just bought a share at $15.65. So SoFi, this is a massive fintech growth company. Let's look at their main business, lending. Lending business is up 55% year over year. That's the highest growth rate on the entire screen. So the lending business is up 55%. And if we go to their next biggest business, their financial services, it's also just as growthy. It's up 41, after grew 101, after grew 85, after grew 195, literally hits a new record every quarter. So if you're going to own a stock that doesn't pay a dividend and does some share dilution, you want to make sure they have good growth, and SoFi checks that box. Their revenue's at a record this quarter to 1.1 billion. And on this 1.1 billion of revenue, they made 166 million of after-tax net income. You know, we don't just want to own companies that grow. We want to make sure they have real profits, real net income and free cash flow that they can return to the shareholder and do dividends and share buybacks and invest in the business organically without having to dilute you. They check that box too. And look at the forecast. Analysts are real bullish too. Net income is supposed to hit 237 million in 2 quarters. So there's still a lot of net income growth. The revenue's up 42. So the way you really want to judge this growth company is off next year's net income. Instead of the past 12 months net income, let's judge them off next year's net income. And this is where SoFi starts to look very cheap because they currently trade at 35 times net income, but they only trade at 22 times next year's net income on the right. That's literally cheaper than the S&P 500. And for the growth that they have, for the margin expansion, net margins up 65% year over year to a 15%, revenues up 42, lending revenues up 55. I think that that's undervalued. I think they could easily justify a higher forward PE than a 22. Again, this isn't one you'd want as a super big size position, but low key, you still want it as a position. And, of course, not financial advice. Always do your own research, always check for yourselves if you think it's a good investment for you. But I have this as a small position. I bought SoFi years ago. I actually regret every share I've ever sold to them, and I recently was able to buy some more shares. But yeah, my original buy order is way back here. I bought my original shares of SoFi back in January 2023, and I've just been holding my shares ever since. Definitely not fully selling out of that one. I actually think it's even a decent time to buy. Okay, yeah, watch out for the people in chat here. Yo, I'll never follow you, DM you. I just had to ban someone with the same name and profile picture as me. And watch out for the people saying Lincoln of DM me if you're losing. Yo, I sell nothing. I have no course book. I'll never follow you, DM you. I promise. I sell literally nothing. I don't coach. I have no private anything. I'm just trying to give my opinion. Only way to support me if you'd like to is just hit the like and follow. It would mean more than a donation just to hit the follow button. So anyway, open profit and loss were up 24% all time in this account, and we're down 3.7% on the day, mainly led by AMD. They're down 9%. So hit the like, RIP my portfolio. Anyway, let's get back to the stocks you guys have wanted me to analyze. Intel was next. Okay, Intel, this is a big holding in NVIDIA. NVIDIA is up crazy on their Intel investment. They're up over like 3 to 4x now. And the government also is up crazy. The government owns 10% of all the shares. Intel reports strong CPU demand driven by agentic AI. The CPU to GPU ratio is shifting from 1 to 8 to 1 to 1. So used to be for every one graphics card, or for every one CPU, there would be 8 graphics cards. Now there's one CPU for every GPU. And they just, especially with, this is why AMD and Intel have specifically been rallying on the CPU rally, the CPU shortage we're experiencing. That is supposed to CAGR at like a 40% rate through 2032 to just this CPU business. And that's what AMD hinted at as well. So anyway, Intel is still a tough sell to me, or because of the forward PE. I personally own AMD as my CPU play, but yeah, look at this. This is their PC GPU market share. They have a 61% GPU market share. Where's the forward PE? Okay, here it is. So yeah, at 182 forward PE does make Intel a tough buy, even though they're down 8% on the day. 182 forward PE does make it a tough sell. Morningstar does say they're a bit overvalued. Execution risk and its foundry turnaround combined with intensifying competition from both AMD and ARM require caution. Well, I'm not worried about that. They are supposed to make 450 million net income next quarter and 650 million the quarter after. So they're basically just now getting net income positive, finally having that turnaround. Here, I'll show you the profits right here. This is what's crazy. Every Apple iPhone used to have an Intel chip in them, and the Macs. Now every Apple iPhone uses their own chip. So I want to pull this up right here. So here's the thing. Yeah, here was Intel back in 2021, before when they had their Apple partnership. They were making like $5 billion a quarter. And then COVID happened and they lost the partnership, and then the profits just been choppy ever since. So that's why Intel really, before the government stake did so bad. It looks like they're turning around now. Still would be, hey, Kathleen said, I like the live. Thank you very much. I appreciate all the support. Someone said GME. Actually, I don't know. This was a pure speculation company. You're not buying GameStop because you believe in the business model. You're not buying GameStop because you believe in the game stores or whatever. You're buying GameStop because you're hoping for some roaring kitty momentum tweet to send the stock up like crazy. Is there any news around them? GameStop approves 2 billion share buyback program. Oh yeah, they're trying to buy eBay. Haha. That was the news. GameStop increases eBay stake to 8%. Wow, okay. Well, eBay is actually a really good stock. I do like their financials, but again, you're not buying GameStop for here's the revenue, the lifeblood of the company, these game stores, It's not one I'd own personally, unless it's a super, super, super small position. So, hey, what's up, Narc? TGIF, absolutely, man. Thank goodness. So, what do you think's a better buy at the moment? Waste Management, McDonald's, or Lowe's? Ooh, that's a good question. I think McDonald's is good. Waste Management, this is seen as like AI proof. If you want a business model that you can just trust money in, sleep well at night, they're not going to get replaced by AI. Talk about a safe company as Waste Management. Bill Gates owns, or the Bill and Melinda Gates thing own 8% of all the company, or 7% of all shares, the Bill and Melinda Gates Foundation. It pays a 1.5% dividend. So if you like a little yield, you buy the shares now, you're still getting 1.5, 1.6% of your money back a year. 26 forward PE seems pretty fair. He just acquired this medical disposal business. People always throw away trash. Americans are so wasteful, and this is a pure American recycling. They have a very valuable as well landfill real estate portfolio, because there's certain places where landfills can't be, next to places where people like. So they actually have very valuable, like grandfathered in real estate. Okay, I saw Broadcom. I want to get to Broadcom, and then we'll try and get to IoT. I apologize, Lemritz, if I'm missing these. I'm trying to get to all the new people's stock first. Okay, then we'll look at a C&Q. Yeah, what's up? We'll do that one, Narc, too. Yeah, I actually just bought more McDonald's. So here's Broadcom. This is your TPU play, or custom chip company. Downgrades Broadcom to neutral, citing Google internal chip development concerns. Oh yeah, Google's making their own chip. Google also is a big partner with Oracle on making the TPUs as well. Broadcom acknowledges Google pursuing supplier diversification while maintaining long-term strategic partnership for GPU and AI networking. Okay, so there you go. Uh, the one thing that made the stock fall on earnings, they beat on every metric, every single metric, even on the forecast, but they missed on one thing, and that was orders. They're like orders growth rate slowed down or something like that. But anyway, I still love Broadcom, and I actually would still recommend it. Not all in at this price, but look, a 30 forward PE is fair. Here, I'll start with this up here. So they currently trade at 65 times net income. They only trade at 30 times next year's net income. Look at how that PE ratio gets cut in half or gets cut more than half. That means that EPS is going to grow by over 100% this next year. And here's the forecast of the EPS. So the net income is EPS. It's just net income per share. So EPS, net income, same thing. Look at the net income in 2 quarters. It's supposed to hit 15.1 billion of net income. If we look at current net income, it's never even been close to 15 billion before. This quarter was a record 9.3 billion. There's still a lot of EPS growth still going to be experienced here. So actually, it's reasonably valued like Broadcom. It's not expensive at a 30 forward PE, but it's not cheap. Like it's like fair here. Morningstar says they're undervalued. Rapid long-term growth in custom AI compute chips and exceptional operating efficiencies across its networking software ecosystems will drive long-term growth. Oh yeah, they own the VMware as well. They own the VMware business, which only grew 1% year over year, but the semiconductor solutions grew 52. That's the real growth driver. And it's like NVIDIA with a higher yield. You get a 0.7% dividend yield. So pretty cool. All right, so IoT stock. Oh, someone said VST versus CEG. I'd go CEG, Apple user. CEG, I really think is, and I was covering this earlier, so I won't analyze them, but I'll give a quick thing. This is one of the best stocks to buy in the market right now. Not financial advice, but you wait to buy it until it falls 5 to 10%. If this falls 5 to 10% lower, like with my reputation, like this is really a good stock to buy 5 to 10% lower. Put it on the watch list, not financial advice. What do? They own 30% of all the US's nuclear reactors, number one nuclear play, number one US natural gas play, and the number one US's geothermal play. They're an unregulated utility. They're powering data centers, and they're only at a 21 forward PE. I don't see it getting much cheaper than a 21 forward PE. Like we're close to the bottom, very close. Not financial advice on CEG. So anyway, let's get to Samsara. This is IoT stock. So okay, I feel like I've heard of this one. So they're a $20 billion company, and the forward PE is a 255. So they trade at 255 times next year's net income. Okay, there we go. That does seem expensive. That doesn't make them cheap. They currently trade at 350 times net income, 250 forward PE still looks expensive. Oh, but that's because they're just now getting net income positive for the first time ever. This company, for all of history before today, was losing 50, 100 mil a quarter. Then they've narrowed their losses to the point where they're now actively making net income every quarter. They made 44 mil this quarter. Revenue grew 30. Let's zoom out on the revenue. That's what you want to see. If you're going to own a growth stock with a super high PE ratio, you want to see incredible revenue growth. And the revenue hit a record this quarter, and the net income hit a record this quarter. This, technically, because it's the most net income they've ever made. That crushed expectations. Analysts only predicted 2 million of net income. They did 44 mil. And that was a real beat, even on EBIT, earnings before interest taxes, which strips away any weird funny money adjustments. They really did beat on earnings by a good chunk this quarter. So actually, even at that's why this one is still worth looking into, even at a 255 forward PE, because I love that top line growth. I love the bottom line growth. I love how they beat on expectations. Actually, they're on my. I like them on my watch list. Yeah, they're pretty cool. IoT. So what's next here? Oh yeah, C&Q or C&Q. Is that Canadian Natural? Okay, this is a cool oil and gas Canadian play. So basically this is Canadian Exxon. This is Canadian Chevron, the Canadian oil and gas stock, and it has a good yield. Oil stocks typically do. You buy the stock now, you still get a 3.8% dividend yield. They raise their dividend every year. So that's a good sign. They're at a 10 forward PE. Oil stocks, since they're a commodity, always trade at a low PE ratio. So only trading at 11 times next year's net income. Exploration and production, oil sands mining, North America. Cool. Okay. Let's check out the bottom line. Or the operating profit here. Yeah, they really are profitable, making a couple billion in net income. They had a one-time adjustment this quarter. It says they made 3.87 billion. They didn't actually make that much. But I bet you, as we know, oil prices right now are through the roof, or since January, they're up still 40% on USO in the Western blend. That's probably why the stock is at such positive momentum the past couple of weeks, because the future earnings are probably going to be revised higher because prices are higher. Anyway, cool. So, Dev said what brokerage is this? Hey, yeah, brokerage I'm on is called Moomoo right here. It's my favorite brokerage, completely free, costs nothing. If you're interested in stocks and want to get this app, type it into the App Store or Google called Moomoo. But if you want to use my affiliate link, I actually have it linked in my profile bio. If you sign up through that link and deposit $100, we'll both end up getting like like fractional piece of Nvidia share or something like that. All right, so next up, yeah, link to bio there. I think why it's red today because NASA rocket burst due to India's supply chain. Oh, there's a lot of momentum around the space stocks around the SpaceX IPO. Check out NASA ETF, the ticker symbol NASA. They own a bunch of space stocks like Rocket Lab, ASTS, Planet Lab. Yeah, Planet Lab's probably leading to a lot of losses in here. So yeah, that one's down 9%. It seems like the heavy momentum sectors are falling, like AI is falling big today. It looks like, Micron's down 9, Nvidia's down 5, Marvell 10, Broadcom 7. So hey, what's up, Norbero? He says, I recently heard of BE. Yeah, this is Bloom Energy. This is your energy, like alternative energy storage company. And Bloom Energy secures 20 billion order backlog, including major AI data center deals. Bloom to join Russell 200, jumping from the Russell 2000. Bloom Energy rules out stock sale, says factory recovery cost. Okay, well, anyway, they have good earnings beats. They really do. Check out the orange line is what the analysts expect every quarter. The orange line, they expected 540. They did 750. That really was a good beat on revenue. It was a big beat on EBIT, earnings before interest taxes, stripping away the adjustments. They expected 14 mil. They did 72 mil. So they really did beat big on earnings. So yeah, they specifically manufacture and install solid oxide fuel cell-based power generation. So converts standard low pressure natural gas or biogas into electricity through an electrochemical process without combustion. It's their official, looks like they got AT&T, CoreWeave as a partner, Congra, Equinix, which is the big data center company. Anyway, energy solutions that supercharge the world's most visionary companies. Some sort of AI beneficiary, you know what I mean? They are really expensive in terms of a multiple though. So, hey, what's up, Minimum? My day is going good. How about yours? I mean, the market is red today, but that gives us the chance to buy stocks. Look at this portfolio at the top. We're down 3.85, but we did just buy, for the first time ever, Netflix stock. Right before the stream, I bought NFLX. In my opinion, now's not the time to go all in on Netflix. If you wanted this as 5% of your portfolio, don't make it 5% today, but maybe make it 0.5 or 1% of your portfolio, something very small. So Uber's a really good deal right now, I think. So, yeah, hey, we'll go over Vistra again. Oh, no, we went over VRT. We have not looked at VST yet. So this is your second purest nuclear play. I think they own 5 nuclear reactors, but mainly it's a natural gas company. So let's see. The forward PE is cheap. I mean, just simple. They're trading at 14.3 times next year's net income. Look at the forecast. It's supposed to hit 720 million net income next quarter, 700 million the quarter after. So they're making like 700 to 800 million of net income every quarter, which is like 3-4 bill a year. And yeah, at a 50 bill market cap, that really is only trading at 14.3 times next year's net income. You get a dividend too, a 0.61% yield. But they own like 5 reactors. CEG owns like 35 nuclear reactors. They're the number 1 US nuclear play, and they're also on a big dip right now. And they're not as cheap, but they're still cheap at a 21 forward PE, or trading at 21 times next year's net income. So I like CEG, and I do own CEG, full disclosure. It's my favorite company to like power data centers, unregulated. I'm still up 24% on them. So a golden opportunity would be like to buy them 5 to 10% lower than here. So SEAL SQ, what's the ticker symbol? LAES, we found it. Perfect. So What is this company? Seals completes acquisition of WeCan and a majority stake of Mirax. To advance post-quantum security capabilities. Seal announces multi-company quantum compute investment strategy, plans continued acquisitions through 2026. So and same with IONQ, what these companies are doing, and it's really smart because they know the shares are overvalued. And this is also why these stocks are having a hard time going up, is because every time they rally, they dilute the life out of you. They issue shares. 400 million. Wait, what's the market cap worth? Oh no. Okay. This is where you start to realize this. So for the full year 2025, they issued 400 million of shares. The whole company is worth 701 million. So you own 63% less of the company than you did a year ago. But since you own 63% less, what did they do? They bought companies with that money. So it's kind of smart, because I would still just be very careful with this stock. But it's basically like, that's the same thing MicroStrategy does. MicroStrategy issues shares and buys Bitcoin, but instead this company issues shares and buys quantum companies. Looks like the management says plans continued acquisitions through 2026. Seal aims to create a root to qubit stack. Okay. Anyway, watch out for the share dilution. Yeah. Oh yeah, my bad there, Brian. I completely forgot about this stock. Hey, what's up, Chill? We'll look at Western Union stock. I had VST, but I was down. Yeah, I was up like 80% on Constellation Energy at one point. Now I'm only up like 25. So here's MG, Mistress Group. So let's see what they do. Technically, the stock is the same price as they were back in 2011. So that's something to look into. They're at a 16 forward PE, so a cheap multiple. What do they do? So North America, international products and systems. This is an oil and gas stock. So security and protection services. The firm serves oil and gas, aerospace, power, infrastructure markets. Okay, let's go to their website. Maybe we can, oh my goodness. Yeah, reject all cookies. They're not okay. Data solutions, they're not getting my data. Field services, in-lab services. I'm trying to figure out like what specific like things they do. Large structural inspections, spider scanner. Oh, that sounds interesting. Huh. I wonder anyway, this would be something to look more into. I'd go on their investor presentation, look into their website. Looks like the growth is kind of slowing down. Like if we zoom out, the revenue today is the same revenue that it was in 2017, 2016. So it starts to make sense why this stock hasn't grown much since 2016, because they're stuck in this market cap because the revenue is the same as it was back then. How about the net income? Yeah, the net income's still a little choppy. Actually, it's gotten better. Like for the past 4 quarters in a row, they have made net income every quarter. But the net income is, 2 mil, 3 mil, a small amount of revenue, but still net income positive. So, well, who is that shareholder? 2025. Okay. Anyway, 16 forward PE. Oh, they're very small. If you look at the top right, okay, they're only worth $567 million. So that's not a huge company, only worth $567 million, but 16 forward PE. All right, next up, Google is actually BE first customer like 10 years ago. They're headquartered. Their HQ is all Boombox Energy. Oh, hey, my music. Thanks for that. That's really cool. Do Robinhood also what brokerage is the best for you? Yeah, hey, this brokerage I'm on right now. I actually have Robinhood. I actually have all these brokerages. I actually have affiliate links too if you want to get any of these. There's Webull as well. My favorite brokerage, if I was going to get one, the most useful one, lowest fee or no fee, completely free, costs nothing, is this one I'm on right here. It's called Moomoo. Just type it into Google or App Store Moomoo. But if you'd like to use my affiliate link, I have it linked in my bio there. Or if you sign up and deposit $100, we both get like a fractional share or something, some free shares. Like I got a free share of Ford when I first sign up, and I just instantly sold it, and some other shares. But anyway, yeah, if you want to use my affiliate links, sign up there. All right, next up we got I see, I don't know if we should cover Tesla. I don't have too much. It's super expensive there. Or ATX says, can you do Nike next? So Nike, I can see why they've been beaten up so hard. I actually used to own Nike. Look at that. And I fully sold out of my position at $79 a share. And kind of thank goodness I did because it's $43 a share. I sold for a loss. But I now understand why Nike has done so bad. So if we look at the revenue right here, the lifeblood of the company, the sales are up only 0.09. So that is not beating inflation. Last quarter it fell or it was up 0.5, up 1. So the revenue really isn't growing much. And so the revenue slightly did grow though. The revenue's up 0.09, but the net income fell by 34. What does that mean? That means margin decline. Net margin fell by 35 after it fell 25%. That's actually like depressing. Nike used to have a respectable 10% plus margin. Now it's like 4, 6, 6, 1%. So, gross margins are down 3% after they fell 7. So margins are getting crushed from tariffs. Look at the free cash flow. Free cash flow has just been drained the past 4 quarters. And there's a dividend sustainability issue. So look at this. This quarter, they made 520 million of net income. Remember that they made 520 million? Well, they pay a dividend every quarter. That dividend cost 609 million a quarter. So no matter what, out of their net income has to come $609 million to go to the dividend. So technically, even though they made 520 million net income, they technically lost money this quarter because they had to pay 80 million more on top of that in dividends. It's one I'm just staying away from. And it's not just a Nike problem. It's actually an industry-wide problem. Look at a Lululemon, which is down 8% on the day. They have a very similar downtrend. It's not as bad as Under Armour, though. Y'all don't want to see Under Armour. Shoe. Let's see. Under Armour, same prices they were back in 2006. Dang. So, apparel industry, I'd be careful. Amazon, surprisingly, I bet no one knew this. Amazon has a 17% apparel and footwear market share. Some people like instead of buying like leggings off Lululemon, will buy like the Amazon one. They're just as good, if not better, for like workout clothes and all sorts of stuff and shoes. Amazon. Anyway, let's look at Robinhood. Yeah, and then we'll look at Tesla and VISN. I believe My Music. I actually would be careful with VISN. I think they sold another one of their companies. They sold off their CommScope, and then they just sold their Ruckus business. Oh, Amphenol. Yeah, we'll look at Amphenol. Yeah. Look at APH after this. So here's Robinhood right here. So this is a brokerage right here. I use their brokerage. They're very innovative. Like they're always the first to everything. They're the first to do overnight markets, prediction markets, crypto, Roth IRA matches, and all Robinhood Gold. I love Robinhood's innovation, and I'm a Robinhood shareholder. I do own shares. RIP my position because they're down. Robinhood just today is down 10%. SEC eliminates pattern day trader rule. Robinhood and competitors implement changes. Yeah. Robinhood launches Trump account in partnership with Treasury Department, attracting 6 million signups. So I remember I don't want to get into politics though. Robinhood completes 250 million acquisition of Canadian crypto platform WonderFi. Robinhood cryptocurrency trading revenue declines 47%. So that might be why Robinhood might be struggling right now, their crypto revenue. And well, I don't just doubt that. Have you seen the actual price of Bitcoin? Bitcoin is actually, Bitcoin and Robinhood usually move together. And if we look at Bitcoin right now, look at this downtrend. I mean, Bitcoin's getting slapped. And if actually on the 5-year chart, Bitcoin has underperformed traditional assets. From 5 years ago, S&P's up 88, Qs are up even more. They've underperformed gold, silver, basically all traditional assets. Bitcoin is underperformed, which is a little odd. That's actually own any crypto. Here's an interesting thesis I heard about crypto. Let's say you owned every share of Apple that exists, every coin or every share of Apple. What are you left with? A company that makes free cash flow and net income and has a brand. But let's say you now own every single Bitcoin. You own literally every Bitcoin in the world. What are you left with? What can you like? It's kind of just off, what's it off? Anyway, like scarcity. I know like some Bitcoin's lost, but that's why I just love companies that pay dividends and do share buybacks that reduce their share count every year and return money to you as a shareholder. And I don't want to know what just happened to Meta. But anyway, Robinhood's great. I love what they're doing with their prediction markets. These brokerages have high margins. If we go to their net margin, like after-tax margin, it was 32% in the most recent quarter. So for every dollar that comes in, they keep $32 after tax. And also, you look at the other quarters, it's 47, 43, 39, 36. These brokerages have very high margins, gross margin of 80, net margin of 30 to 40. They're making a couple hundred mil in net income a quarter. So I'm a big fan of Robinhood, but it's still a tough buy today. Even on this dip, they're at a 38 forward PE, which is still too expensive, but it's a stock that I do eventually want more shares of because here's my they're in please load Weeble. Okay. Hopefully no one can see my password there. Robinhood is in my Weeble portfolio, and I regret every share I've ever sold in them. I only have 5 shares of Robinhood left. If you look at the top, I sold 50 shares or like 58 shares at 36 a share, and it's 79 today. I regret every share I've ever sold in them because I'd be up a lot more, but I might try and look to get more shares of them. Okay. Next up, what happened today? Yeah, market's selling off. I actually wanted to check out some Meta real quick. I wonder there's some sort of look at that like instant drop on Meta. Let's see if we can find the intelligent comments here. If they had to release the news. Yeah, what news? Thank you for not telling us the news. Or maybe has it loaded in the new Meta weighs big equity raising. No. Meta selling stock. Meta could sell tens of billions of dollars of new stock. Dude, Google just did this. And you know who should benefit? You know who should go straight up? Comfort Systems and these AI beneficiary plays. You know what we're scared of right now? For a lot of our holdings, because we own the picks and shovels play of AI. In my opinion, you want to not just own NVIDIA, own the companies doing the HVAC work and the construction and the complex MEP work, which is mechanical, electrical, and construction. You want to own these kind of pitch and shovels plays, and we're kind of scared that CapEx is going to slow down. We don't want companies to slow down spending on AI. And what are we seeing? Google a week ago just issued 80 billion of stock, and now we're getting news that Meta's spending or might issue tens of billions of stock to get money. That means they're spending more on AI, and that should benefit, all these other companies. All right. Are you aware their CEO just bought more shares at market at 83 of Robinhood? That'd be cool. Vlad, I like Vlad actually as a CEO. Someone said A and F. So, Abercrombie and Fitch, we just looked at Nike stock. They were on a massive decline. Looks like Abercrombie and Fitch is also on not a massive decline, not as bad as Lululemon and them. But look at that multiple. This is where it starts. I mean, again, they sell a commodity. You can buy a shirt from anywhere. So that's why this is such a low multiple. But they trade at a 7 times net income. So literally 7 times net income. Their net income is declining. Like net income was down 16%, down 7, down 14. So and the revenue did slow down. The organic revenue only grew 1.5. Net income down 16. So yeah, net margin did fall a bit, but 7 forward PE seems cheap to me. How are you in like 15, 10x stocks? No, I only have one stock that has ever 10x. I do have 100% return on a lot of stocks, but I've been investing since 2021, like here, if you look at the very bottom right, like I bought my original shares of Robinhood in 2021. Same with UiPath. I'm down bad on them, but yeah, I've just been in the market for a long time. And the best thing my biggest regrets are selling out of great stocks. My biggest recommendation is never selling your trimming once you buy a stock. If you look at the very top left, this is called my buy and never sell portfolio. Once I buy a stock in here, I'm never allowed to sell it. And that's this experiment. I've been doing it for a year. Here's a screenshot of my portfolio exactly 1 year and 1 month ago today. I kid you not. My main holding that I'm up 400% on was down 16%. Powell Industries was up only 100%. I was down on Amazon. I was only up 3% on Amphenol. Here it is today in just a year. It's really this past year that's really like changed everything for me. Because, I was holding the bag on a lot of these stocks, but from 1 year ago exactly, I can't believe it. But on a return money weighted average, we're up 151%. We actually would be up more than 151%, but every time I deposit money, it makes that return money weighted percentage go down artificially. But still, 29K, I'll take it. That's pretty much all our gains came in the past year. But our other portfolios have not been so lucky. This one, actually, the past year, that account was up 160. This one's up 15% the past year. Actually, 1 year ago is also when I started my Roth IRA. Started this pretty much exactly a year ago. This is down 3% all time, but it looks like McDonald's is really, our defensive McDonald's is leading the day. But yeah, RIP Meta. Looks like they're issuing shares. Can't believe it. They're really serious on their CapEx spend. Caterpillar 2, Google I trust issuing shares, Meta not so much. Yeah, my music. Caterpillar and United Rentals have been phenomenal. These are your construction companies. The companies help constructing the data centers. And there's just a massive re-onshoring of US manufacturing. We're trying to be more manufacturing independent from China. You know, that's the whole point of all these tariffs, to bring back manufacturing to America. And construction has benefited, and the resource industry as well. We're now sourcing rare earth minerals like uranium only from the US and Canada now. We used to buy uranium from Russia. Now we only source it from the US and Canada. Same with other rare earth alloys like lithium. We're starting to get into that. Hey, Egg Mayo, what's up, man? Would you prefer CEG or VST? CEG all the way. Purest nuclear, purest geothermal play. Vistra Energy is two pure natural gas. CEG is more pure nuclear. And I like their geothermal business too. I think CEG is a great buy, 5 to 10% lower. What's your profit percent on your no selling portfolio? Well, technically, so I put $17,000 or maybe it was $16,000 initially into this account, and now it's worth $50K. So we're up $32,000 return money weighted, or 350%, versus the NASDAQ or the S&P is up 76%. Here's for the longest time, look at the very left here. See, this account was only worth $100 for like the first 2 years. It was worth $5,000, not until a year later. And it was really just this past year where all the gains have really came. All those blue dots, those are all my deposits. And all the little purple dots, those are dividends I received too. And whenever I just deposit more money, reinvest the dividends, don't sell the stocks, and it's yielded good. And I don't do anything crazy. Like, I do something so boring. I don't do options. I don't do crypto. I just hold 6 great companies, and I genuinely believe you can get better returns than the option traders, than the crypto people, by just holding great companies over the long run. Like you can get like 20% plus a year, like just with growth stocks that like with good fundamentals, like that aren't even taking a big risk. Like just buying boring Netflix right now. This is the stock I just bought today. It's one of my my most recent purchase. I don't think now's the time to go all in, but I think it's a decent nibble. I just did a small nibble on Netflix today, right before the stream. So I do think there still are opportunities out there. Procter & Gamble is flying. Yeah, this is another one where, tech market's kind of red today, but this is a defensive consumer staple company that's green. McDonald's is super green. Coca-Cola stock is super green on the day. This sells stuff that people still need. Even in a recession, people still need, baby, feminine, family care products. They still need beauty products, healthcare products, grooming products. So, like, did you know they own Old Spice, Gillette, Tide, Bounty, Huggies? I mean, they own over $21 billion brands. I guess here's all their brands right here. They own like Febreze, like Bounce, Bounty, paper towels, Cascade, Charmin, just stuff that everyone needs. So, and I love Old Spice and all their brands. Charmin, they're like the higher quality stuff. Okay, Mr. Gurdon, good to see you, man. He says SHAZ. So this is Cheiron AI Holdings. It's actually doing great. Meta or Amazon at this current moment? If I was going to buy one at this current moment, honestly, Meta. But Amazon, I own more of. So Cheiron AI Holdings, they're down 15% on the day, but they've had a phenomenal rally. I've never heard of this AI company. Let's check it out. They're just worth $1 billion. So they're worth pretty much exactly $1 billion. Provision of high performance compute. Oh, so this is another data center leasing company. What do? Basically, they own a bunch of NVIDIA chips and they rent it out. So yeah, develops and delivers GPU cloud computing and AI solutions. So they rent out GPUs. So basically, where are they headquartered? Is this a US company? New York, yeah. So basically, this is another CoreWeave, another Iris Energy, another AP Applied Digital, another Nebius, those kind of stocks. Meta's considering raising tens of billions of dollars through a stock offering to fund AI. The Google literally just did that. Google issued $80 billion. I just saw a crazy post as well. So Google's trying to raise 80 billion, while Meta's trying to raise tens of billions, while SpaceX is about to raise 80 billion, while Anthropic is trying to raise 50 billion, and OpenAI is trying to raise 80 billion. Plus the other IPOs that I even mentioned. Where's this money gonna come from? So Meta can't go to the bond market, so they had to. This is like the last resort when you issue shares. Meta considers $200 monthly subscription for AI agent product Hatch. I don't know about all that. And Meta delays Spark AI model. So yeah, Meta has kind of been behind. They have this crazy capex spend, and Meta doesn't have a successful. Here's what they're spending: 30 to 40 bill a quarter. Meta doesn't really have a successful LLM right now, like Gemini, OpenAI. They're taking over. They have no market share really, and they're not. They're trying to get into the cloud, but that won't. They're so competitive with AWS and Azure Cloud. And anyway, I love what they're doing with their Meta Ray-Ban glasses. Their smart glasses. They have an 88% smart glasses market share. Here's what they make. They make 20 to 24 bill a quarter, and they're spending 30 to 34, 50 bill a quarter. So they have a net debt position now for sure. But their core business, I'm extremely bullish on. I think AI is going to enhance their advertising business. They have 3.54 billion daily active users. And once they nail their LLM, maybe they can just integrate LLM to the Instagram and WhatsApp and all these other things to make it better. But I am really, they just disclosed they make $50 per year per Facebook user in the US. So they make their ARPU is $50. They own Instagram, they own Threads. They're just now introducing ads to Threads, so that'll be a nice tailwind for earnings, and WhatsApp too. So what is Irvis? Hey, if you have a stock, I see some weird things in the chat. Please give me a ticker symbol. Please give me a ticker symbol if you have a stock. Yeah, Coca-Cola and Consolidated are, that's why we have these defensive names. Wow, up 7%. Now Coca-Cola's up 7%. And McDonald's is up 2.75 on a pretty bad day. If we look at the Qs, happy Friday, negative 4% day on the Qs. So, and mainly probably led by Nvidia's down 5.8. I think Nvidia's a really good deal, but yeah, SoFi's down 8, Palantir 5. Yikes. But yeah, there's Coca-Cola Consolidated, strong day. So that's why we have some of these defensive names. Like in here as well, our best performer in here is actually Progressive, that insurance company, and Sprouts Farmers Market, the grocery store, the healthy grocery store, and like a healthcare AbbVie, a Southern company, the regulated utility. Yeah, I don't know what Meta's doing. Nathan, how are we? Bit red out there. Yeah, Steven. Yeah, bit red. Meta is too diversified in their product offerings and research. Yeah, what's up, V-Man? Yeah, I'm a shareholder of Meta. Again, full disclosure, I'm totally biased here, and I'm still up 10% on my position, but it's my smallest position in here by far now. I might actually try and allocate some more money into them. Whenever I get money, I've just been allocating it to other stocks, into my Roth IRA recently. See, dang, Innodata is down 15. Our Roth IRA, besides Innodata, is doing pretty good because this is also full of a lot of defensive names like a CareTrust REIT and HCA Healthcare, the largest non-governmental hospital group, Cavco, factory built housing. All right, next up, why does Google need to issue shares when they've loads of cash on hand? Maybe they don't want to. Basically they're kind of refunding the buybacks they've done over the past year. They're kind of taking the buybacks they've done away. So if we go to Google, has the second largest share buyback program on earth. And check this out. Google historically, every quarter buys back 15 billion of their stock a quarter. We can go back all the way to 20 years ago. This is every quarter for years. They're always doing 12 to 13 billion of buybacks a quarter. They've kind of just undone a bit of it. But anyway, I'm not worried about Google. They have a $400 billion backlog. Yeah, now it says 80 billion equity raise. Warren Buffett's Berkshire Hathaway's buying 10 billion of it. I love Google's TPUs. I love their Waymo business. I love the Google Cloud. I love Android. I love YouTube. I love Gemini. First off, I'm a big shareholder of Google. They're my largest holding in here, but I bought them for a reason. I didn't even buy the dip on them. That's the crazy thing. I bought them pretty much exactly a year ago, and just in 1 year, Google's up 112%. I did not expect that. So from 1 year ago exactly, Google's up 112. I'm up 124. So I pretty much bought them exactly a year ago, and I'm shocked at the results. That's when they were kind of seen as an AI loser. They were scared that OpenAI is going to take over Google search mode, but Google has now taken over. Gemini's done just as good as OpenAI. Hey, Nikita, why are things shrinking today? Yeah, I don't even have a specific question. I mean, I know rates are actually so what we've kind of been expecting are interest rate cuts, but now the market is pricing in interest rate hikes. So on the July meeting, 12% chance of a 25 basis point hike. September meeting, 35% chance of a 20 BP hike. And then the October meeting is where it starts to get crazy. We almost have a 50% chance now of interest rates going up by 25. Actually, more than that. There's over markets pricing in right now for real. There's over a 50% chance by October 28th, interest rates are going to go up over 25 basis points. That's not good. Interest rates going down is what we want, makes capital easier to get, and it's tough for a lot of the interest rate sensitive sectors like the home builders, like a Lennar, a Lowe's, which is very interest rate sensitive, the real estate, bonds like TLT, US 20-year Treasury bond and more too. These interest rate sensitive sectors have been struggling. I wanted to pull up Lowe's, but my Wi-Fi is just doing terrible today. I apologize. I hope everyone's having a good Friday despite the market being red. It actually gives you a chance to, this is really what we want as long-term investors. We know the market's going to go up eventually. So we can take today and see if there's any cheap valuations. And for me personally, of course, not financial advice. Don't copy me, do your own research. But I just personally picked up for the first time ever, right before the stream, 8 shares of Netflix stock. If you wanted this as 5% of your portfolio, don't make it 5% today, but maybe nibble, make it like a 0.5 to 1% size position. I love their subscription model business. But yeah, look at the top. We're down 4.4% on the day. In open profit and loss, we're up 23% all time. I love being fully transparent. I go to a lot of other live streams. No one shares their holdings and their lifetime profit and loss and what they own and what their recent purchases are and lifetime holding on stock and performance. So yeah, and they're usually selling some. If you wanted the follow button, that's the best way to support me. I promise. I have no course book. I don't coach. I literally sell nothing, absolutely nothing. I've already banned a few people that had the exact same name and username as me. I'll never follow you, DM you. I sell nothing. The only way to support me, if you wanted to support me, is hit the follow button or subscribe to my YouTube channel. I'm trying to build up my YouTube account. I'm also streaming on there. But yeah, YouTube channel is called Nathan Robert, and you can rewind the stream. I've been streaming for over 2 hours and 10 minutes now, so I probably won't be streaming for too much longer. My head's starting to hurt a little bit, but let's look at some more stocks here. Buy Google or GOG or GOGO. I own GOG. It doesn't matter which one, really. So let's see. Someone said Chipotle stock. Yeah, let's do Chipotle. So this food sector has been getting crushed. Y'all want to see something depressing? It's not just Chipotle. It's all of them. Look at Wendy's. Did you know Wendy's is lower than they were in their 1997 IPO? You're eating at a charity. They're lower than their 2008 price. I feel bad for Wendy's. Just the past year, they're down 60%. It's not just a Wendy's problem, though. It's a whole QSR, quick service restaurant industry problem. Look at Jack in the Box. They're the same prices they were back in 1999. I won't go. I could go through 10 more. Red Robin's at their 1990 price. Krispy Kreme is. And so many more. But anyway, here's Chipotle right here, no exception. Out of all the food stocks to buy, I definitely think Chipotle is one of the better buys. Definitely more quality. Let's see what Morningstar says. Morningstar says they're undervalued, continuous menu innovation, strong brand power, driving superior unit level economics, and technological upgrades enhancing operational efficiency will drive long-term value growth. Interesting. What are the earnings recap here? So restaurant segment showed top line growth of 0.5, comparable sales increased in 49 new store openings. Profitability was pressured by rising food, beverage, packaging, and labor cost, causing operating margins to drop from 16.7 to 12.9. This is exactly what everyone's experiencing right now, margin compression. So simple metric here, gross margin on Chipotle, gross margin's down 11. Net margin, after-tax net margin is down 27. So it starts to make sense why all these food stocks are starting to get beat up. Labor cost is high. Tariffs are making food like cattle, beef prices are through the roof right now. So revenue of the company grew 7.4, mainly kind of fueled by opening up 50 new stores. That adds to their revenue, just these new stores. So it's not like existing stores growing or causing this. But here's how you can tell. So revenue grew 7.4, but net income declined by 22. So net income, again, that's that margin compression, but still, they're nowhere near bankruptcy. They still easily make 300 to 400 million of after-tax net income a quarter. So they still print money every quarter. But Shall I buy today's dip? I think it's a decent dip to start nibbling on. Yeah. If you have like a bunch of cash, don't spend all your cash today. But oh, Rolls-Royce stock. This is a really cool one. This a lot of people when they hear Rolls-Royce, this is a European company or maybe UK, they think of the cars, but this is not a car company. They're mainly really a aerospace and defense business, making jet plane engines, stuff like that. So civil aerospace, that's half of the whole business. Next part is power systems, and then defense is another 22%. They've grown their bottom line, net income. We've converted the currency from British pounds to US dollars because that's where they're headquartered and that's the currency they report in. They're also a little different because they're headquartered there. They report in H1 and FY. So this is first half and full year. So they don't give quarterly reports. They only report biannually. But look at the net income growth. Record full year 2025 net income of 7.8 billion. So I am impressed. And you get a yield of 0.85% dividend with only a 15% payout ratio. The forward PE does look a little pricey though at a 34. But if war fears start to escalate and stuff like that, these aerospace and defense businesses should do good. Like Raytheon's another really good one, another aerospace and defense one at a 31 forward PE. So that's kind of the norm for this industry right now is that they're usually a little bit of a higher multiple. Yeah, hey, Captain J, nice. What did you buy today other than Netflix? I didn't buy anything other than Netflix today, except one share of CTRE, Care Trust REIT. This is a real estate investment trust in my Roth IRA. I'm still down 4.8% all time on them. But they've already rallied. They've had a rough week. So anyway, and same with HCA Healthcare. They've been rough too. But anyway, yeah, McDonald's is really leading the gains. Meta starting to kind of recover, put in a bottom. Meta just announced they're issuing shares to, fund AI CapEx. Kind of crazy. So what is DRTS? I see. Oh, and is the person who wanted ONDS still in here? I can look at ONDS. Which platform is this? Hey, this platform is called Moomoo. You can just type it into Google or the App Store. I also have it linked in my bio. So if you'd like, it's actually my affiliate link. So this brokerage I'm on right now, it's linked in my bio. It's called Moomoo. So, and if you deposit $100, you both get like a free stock, but it's a completely free app and you can just analyze stocks without using their brokerage and depositing money. So here's Alpha Medical. So you want to be careful because if you look in the top right, they're only worth $816 million. So you just want to be careful when companies are that tiny. Looks like they're also revenue-less right now. When we click on data, it says no revenue because they've never sold anything. They've never sold a product or a service and they lose net income. So with having no sales, they lost 22 mil this quarter, 12 mil, 12 mil, 10 mil. So they've lost like 50 mil the past year. And that's a lot of money. When you have no revenue, losing $50 million when your whole company is worth $816 million is rough. But check out future forecast. Next quarter, it looks like analysts are seeing them make revenue for the first time ever. They're supposed to make $200K next quarter and then $500K the quarter after. So you're basically buying this stock as they're getting their first ever sort of revenue ever. But you do still want to be careful looking at these net income losses. Like it's a big future story to pay for. Clinical stage oncology therapeutics company. So interesting there, but you want to keep the allocation real low there. What's this here? Wait, what it do? How many shares of Netflix did you buy? I bought 8 shares of Netflix. Here's my position. Literally bought them right before the stream started. So yeah, what is this down here? Netflix announces 2026 content spend. Anyway, I love their subscription model business. And Netflix about a month ago rose their subscription by $1 or $1.99 a month. I don't know about you guys, but I'm not canceling my Netflix subscription. They really do have pricing power. And I believe their advertising business is going to grow like crazy. So that's my thesis on Netflix. And the forward multiple is a 22. So they're only trading at 22 times next year's net income. I don't see it getting much cheaper than that. So what about Nvidia? Oh, or Nebius and Walmart. Ooh, let's let's do Walmart. So this is a really nice recession resilient business model. All stocks are really red today, but here's Walmart up 2.5%. even in a recession, people still got to get groceries and toilet paper and whatever, staples. Even in a recession, people still have to eat. Your stomach still got to get fed every day. So, Walmart, I love their main Walmart, but I also love their Sam's Club business model. It's like a Costco copy where you have to pay for a subscription just to get into the store. So, whether or not you go to the store every month, they collect that subscription revenue. So, Sam's Club is cool. And also, they have like the loss leaders, like the $1.50 hot dog. Those are always clutch. The loss leaders that drive more traffic in. But look at their bottom line. Walmart makes an after-tax net income every quarter, 5 to 7 billion of net income every quarter. They were actually the best performing stock in the S&P 500 in the year 2008. So when the market fell 40% that year, Walmart was actually the best performing stock. Same with McDonald's. And it's weird because McDonald's and Walmart are both up like crazy today on an extreme red day. The tough part about Walmart is this forward multiple, though. They trade at a 40 forward PE, which means they trade at 40 times next year's net income. It does make it a tough sell. But these grocery stores always trade expensive because the business is so predictable. You know, Costco trades at a 45 forward PE, even more expensive. They're also really great. And actually, Walmart said they had some record signups for their Walmart or Sam's Club membership plus because it's like with oil prices being so high, people are signing up for Walmart Plus just to get their cheaper oil prices. And we actually recently got on the Sam's Club membership. So next up, I see Micron has been so good except for today. Yeah, Micron's down 12% right now. This is your memory RAM shortage company right here. They're just having like a healthy RSI retrace, we'll call it. At a 9 forward PE, it's really hard to be bearish. They only trade at 9 times next year's net income. So, yeah, SanDisk as well. So is that SNDK? So SanDisk and Micron, these are your two memory shortage companies. They both pretty much move near identical. Here's what we're experiencing. If we just look at their net income forecast, like even on SanDisk on the very left, the net income's 111 million. It's going to grow to 5.9 billion. It's never been close to 5.9 billion before. And when we've judged them off next year's net income, because this is a growth company, why would we value them off trailing 12 months net income? Let's value them off next year's reasonable net income expectations. They only trade at 9.3 times next year's net income. I don't think that's some peak bubble valuation. I think that could still stretch higher to like a 10, 11, 12, 13 before it maxes out or whatever, But they really trade off the momentum around chips. And, look at NVIDIA. If NVIDIA's down 6.2, Micron's going to be down. If NVIDIA's having a cold, the rest of the AI ecosystem's going to sneeze as well. But that's the crazy part. I don't think there's like some specific news. Like, I don't know. And we looked. Does anyone know? I know the rate hikes. Could you name the apps you use, please? Hey, Umar, they're all actually linked in the description of the YouTube stream. I see you're on YouTube. This app I'm on right here is called Moomoo. First link in the description. I also have Webull and Robinhood. They're all brokerages. They all ask for a bunch of information. They all send you tax forms and everything because whenever you make money on a stock, you got to pay taxes on it. But yeah, out of all the brokerages, Robinhood's good. It's simple, but you can't analyze a stock in here. That's why I like this brokerage the most. And you have to pay $5 with Robinhood a month to get features like their APY. This app right here is completely free, costs nothing. There is no way to pay them money. There is no subscription tier. You get this for free at 3.35% APY on your idle cash, and they have all the best analysis tools. Anyway, first link in my bio description there. Okay. We'll look at a few more. I've been streaming for like almost 2 hours and 30 minutes, so we'll look at a few more, then I gotta go. So Steven, what's up, George? Yeah, I went in on CEG, maybe buying here. This is one of my top recommendations, super not financial advice here, but add this stock to your watch list. If this stock falls 5 to 10% more, buy this stock. Super, like not financial advice, of course, but do your own research on this company. I'm still up 23%, so that's why I'm waiting for that 5 to 10% more drop. It might not ever happen. And if this is the bottom, if this is the permanent bottom and we don't get that, then GG, GG, you tried. But if this really is the permanent bottom, I don't believe. I'm waiting for a 5 to 10% more drop, and I'm going to load the boat on CEG. If you're wondering what is this company again, largest energy power producer in the U.S. They specifically focus on C&I customers, commercial and industrial. They own the largest nuclear reactor fleet. They own over 30% of all the U.S.'s active nuclear reactors. Largest pure play. There is no close second even. They're the number one geothermal play in the U.S. They supply 10% of all of California's clean energy just from the geysers, which harvests the steam that comes out of these geysers and spins a steam turbine. Then they pump cool water back into it, and it's like an infinite uh, they do tours of it, infinite electricity. All right. There's very few spots in the world where you can actually harvest the geothermal energy, and they own the one that. Okay. DRAM is taking a beating. Yeah, that's your memory ETF. So if you don't know which memory stock to buy, like if you're like I know Micron's a memory company, and SanDisk and Samsung and SK. This ETF just diversifies your money up for you into all of the top RAM companies if you don't want to buy one individually. So yeah. Adobe. Okay, we'll look at Adobe. This is your software company. So this is one of the companies that I honestly could be hurt by AI. You know what I just saw? Here's how you know Adobe might get hurt by AI. No one, when they see something fake, no one says, dude, that's photoshopped, man. That's fake. That's photoshopped. Everyone says, bro, that's AI. That's AI, bro. So anyway, Photoshop, maybe in 10 years from now, we might not need Photoshop as much. Maybe you can AI generate a thumbnail. Actually, YouTube just has this new feature. You can AI generate thumbnails. It's so cool. That could be a real concern in a couple years. And that's what's being priced into the stock because the current fundamentals are super strong, but they're saying in 10 years from now, will this one be hurt by AI? And I can honestly kind of understand it. Same with Duolingo. I'd be careful with Duolingo. So 13.5 forward PE, ridiculously cheap. I mean, a 13.5 forward PE for a company that just grows their net income like crazy, insanely good subscription model company. I use Photoshop and After Effects every day for my YouTube channel. Please go subscribe. They print $2-3 billion of free cash flow a quarter, $2 billion, close to $2 billion net income, and buy back their stock like crazy. Annualized reoccurring revenue. So every year, annualized, they get $26 billion in annualized reoccurring revenue. So Morningstar says they're undervalued, but it's really, you're buying this as a thesis on what will happen with AI in 10 years from now. So yeah, I am personally just staying away from Adobe because of that fear. What's your view on Enphase? This is your solar company. They make the AC to DC converters. So that's the solar panels, collect the energy, then it has to be converted. So they make the inverters for solar panels, and they're down 17% on the day. This one, I bet, is down. Solar is super interest rate sensitive with real estate and people upgrading their house and stuff with at-home solar panels and at-home electric vehicle chargers and stuff like that, which Enphase does. In a high rate environment, and especially where rates are expected to go up, but there's over a 50% chance now rates are going to go up by 25 basis points in the October meeting. That's not good for this company. And couple that with, look at the PE. They currently trade at 55 times net income. Well, they traded at 114 times next year's net income. So their net income is actually supposed to go down. Let's see that in the forecast. Yeah, look on the left, it's 66 million. It's supposed to fall to 18 mil. So these net income forecasts are bad. And actually, I would not buy that one. If you really like solar, if you believe in solar as the industry, in my opinion, this one's also on a big dip today. Get First Solar stock. I'm always a person that judges a company off the fundamentals, and look at this company's net income forecast. It's supposed to be 300 mil, 567 mil. Look at that. It's like never been close to 567 million before. That was a record quarterback here, 520 mil, supposed to grow to 560 mil. Out of all the solar companies to buy, how about get the one that prints net income and it's still cheap? Remember how Enphase Energy traded at 115 times next year's net income? This one only trades at 14 times next year's net income. So I always say go for quality. Even though this one, is kind of appreciated more, if you really believe in solar, go with the quality one. And I think you'll get better returns buying First Solar than Enphase. Hopefully that was kind of helpful there. Sometimes if I see a stock that I don't like, sometimes I'll kind of recommend one that's similar industry. Yeah, Broadcom's report disappointed investors. It was just one delivery metric on Broadcom. They beat on every metric this quarter, rose guidance for Q2, but missed on their deliveries. Where That would like the delivery growth rate slowed down or whatever. So something about that. Broadcom's cheap and Nvidia's cheap. Have you heard of Toast? I'm a big fan of. Yeah, this is your restaurant point of sale company. So if you ever like go to a restaurant or like a food truck and there's that little when you're checking out, the little black screen that says, "Hey, would you like to leave a 10, 20, or a trillion% tip?" Those little devices where it allows businesses, this is mainly restaurants, to accept, it's a point of sales and payment system. So the thing is, if you look at any restaurant right now, you look at Wendy's, you look at Burger King, you look at McDonald's stock, you look at any food stock, Red Robin, they are struggling in North America. And that's why I think this stock is struggling because their main customers, QSR, quick service restaurants, are struggling. Let me look up Toast. Oh my goodness. I'll show you their website right here because I used to own this stock. So yeah, here's their website right here. They give they're gonna well, here's their website right here. Um Yeah, like these little like scanners right here. It helps out restaurants and stuff. And they used to give like a pitch, like something percent. So businesses near you, these are probably local. I've never heard of any of these before, but I'm trying to. Okay, yeah. Here's the thing I was talking about. This is the selling point with Toast. The average check size is up 15%. That's another 127,000 per year when we're at full capacity. Could be because they're asking for tips, but who knows? All right, so Toast is a cool. They're the most profitable they've ever been though. Out of all the restaurants positions to be in, restaurants are going to cancel their POS system unless the whole thing is getting shut down. So this is like the best part of the restaurant industry to buy. And they're the most profitable they've ever been, 126 million net income. I believe they have no net debt. The free cash flow is super growthy and the net income forecast are good. Look, they beat on net income for the past 3 quarters in a row and the forecast are good too. It's supposed to go to 140 million net income, assuming they don't beat. It's never been close to 140 million before. So I really like this one. And look at the forward multiple. It's a 25. I think that's cheap, actually. Undervalued market cap there. But I think it's also because what are restaurants doing again? Like a Wendy's, like RIP Wendy's. Okay. Sorry if I'm missing out on some stocks here. Um, what drove you away from Toast? I don't know. It was actually the restaurant decline. I saw and I rotated that money. I've forgotten to what. It might have been Microsoft or Apple Oven, but I traded one software for another. I was scared of the restaurant slowdown. I saw what was happening with Wendy's and Red Robin and Krispy Kreme and all these restaurant stocks, Portillo's, and I was scared. So NVIDIA analysis. Hey, we've already looked at NVIDIA a few times. Maybe we'll come. We're gonna look at 2 or 3 more stocks, and I gotta go. But let's look. We looked at Robinhood too. We looked at SoFi. But let's look at it. Stocks are down mainly because Broadcom's report. Yeah, Broadcom show they will not increase power of data centers. Okay, so let's actually. Ooh, SoFi, Futu. Let's just do Futu right here. So this is actually a stock I just bought a lot more of. This is an international brokerage. So actually, if you look at it, I just bought 5 more shares at 89 a share, and it's at 91 today. So basically right on my cost basis. If you're wondering, what is FUTU stock? The top here you see Moomoo. That's actually the app I'm on right now. This brokerage I've been using this entire stream, publicly traded. So if you look at the very top of my screen, you see Moomoo. The stock in the top left is also called Moomoo because that's this app I'm on right now, publicly traded. So basically why they are down is because they just got fined. They're in trouble because 17% of their customers are mainland China. So the 17% of their brokerages are in China. And they allowed, without permission apparently, people in China to buy American stocks, to buy American ADR stocks. And apparently China was not happy with that. So they fined them money. And not just Futu, but also TIGR. I don't even think it was like their fault. I think China's just not happy. But yeah, these international brokerages got fined for allowing people in China to buy US stocks. So that explains the dip, and that's not scaring me out of Futu. I think this is a good buy the dip opportunity. It's a great brokerage, interest income. They collect brokerage commissions. What's so cool? So most of the revenue comes from interest income. Here's their main thing. If you look in the very middle of my screen, this app gives you for free a 3.35% APY on your idle cash. So literally every single day, Ooh, can I show, like, my history? Yeah, I used to own, like, a lot more cash in here. Let me see if I can scroll back to when I used to have a lot of cash. I got $1,000 of cash. They'd pay you daily interest. So you get your 3.35% daily interest, or that's the annual yield, and they give you that for free. Here's the business model. They give you a 3.35% yield. They get like a 4% yield and pocket the difference. So it's kind of smart, all high margin for them. Anyway, that's why I own Moomoo stock. I also own Robinhood stock. I also own SoFi stock. So I'm a big fan of the fintech industry. And they're also a very high margin industry. So if we look at net margin right here, excluding this, they just included the fine this quarter, excluding the one fine that they paid, they make 50% plus net margins. And y'all want to know a new feature that was added today? I'm never a fan of doing these because it's pure speculation, but they added this today. This was not in the app yesterday. This is a new revenue stream for Futu. They just added in prediction markets to the app. So again, I don't. Oh, this is cool. What companies will officially announce an IPO this year? Jersey Mike's 93% chance. Yo, you could vote no on this, by the way. There's a 55% chance Discord will announce an IPO this year. You could vote no. If you vote no, like I think Mr. Beast Industries was on here too. Yeah, Beast Industries. There's a 14% chance he's going to announce an IPO. I don't think so. I mean, you'll only get a 14% return, but I'd maybe vote no on. Anyway, I never recommend doing prediction markets. Sometimes it's just fun to see what the live market odds are of certain events. So last stock here, how's SpaceX doing? So SpaceX is not public yet, but they are preparing for their IPO. They're trying to issue. Oops, sorry, my phone is getting low here. It's starting to lag and stuff. I apologize. Yeah, can we please? Okay, so their market cap, they're a $1.77 trillion company. They're trying to raise like $80 billion of stock. So yeah, they got like Starlink, connectivity, artificial intelligence, space. So how's their main business doing? Connectivity. Again, this is the only data we get. It's cool. At least we get to see some data here. Looks like Ireland is 10% of all their revenue. Anyway, I'll need more financials to really deep dive into them. But here's the thing about IPOs, if you didn't know, to be careful with. If you buy before the IPO, so if you lock in shares right now, you say, hey, I want access. I'm going to lock in SpaceX right now before the IPO. Look in the very middle here, the flipping policy. Investors selling or flipping shares within the first 30 days may be restricted from future IPOs. They don't want you, and if you do, they basically won't allow you to buy any more IPOs in the future. They don't allow you to sell shares within the first 30 days. And if you didn't know, when a stock IPOs, the first 10 days, 20 days, is when they rally the most. There's the craziest momentum in the first 20, 30 days. Then they fall and slowly bleed down. So it's kind of tough to lock in before. Nice. Okay. I guess what is NTAP here? Net app. Ooh, wow. Look at that gap up. So they reported earnings. So the reason that was a massive gap up that day is because of earnings report. Let's go see what numbers they reported. They must have been good. And look at this. Even though the stock is like had this massive gap up, they're only at a 23 forward PE. That's like an S&P 500 multiple. That implies to me this isn't some peak valuation. If they really have growth, it could still stretch up higher to like a 28, 29 before it maxes out. Send this higher. This is a hybrid cloud and a public cloud company. What's the margin on this? 20% margins. AWS runs at like a 25 to 30%, Google Cloud higher. I have my cloud exposure via Google Cloud, AWS, and Azure Cloud. But this is just another, looks like a pure cloud play, like an Oracle. So, while with those other three stocks like Microsoft, Google, Amazon, only portion of their business is cloud. This one looks like a pure cloud play. US is 47% of the revenue, 23 forward PE. So you get a 1.3% dividend yield. Interesting. But there is a lot of competition, I'd imagine. But they had a big gap up on earnings there. I'm down $2,800 for the day. Oh, hey, now, yeah, look at me in the top right. Today's profit and loss, we're down $1,500 in this portfolio. Head over here to my this account, we're down in another $863. And then in our Robinhood portfolio, we're down another $370. So hit the like for me. That would be that mean more than leaving a donation. Actually, if you would just subscribe to my YouTube channel. I actually gotta go. I hope you guys have a great rest of your Friday. I know the market's red, but there are some opportunities. I did just pick up Netflix for the first time ever right before the stream. Actually, I recommend rewatching the very beginning of the stream. I'm streaming on YouTube. My YouTube channel is called Nathan Robert. That's the best way to support me if you wanted to. I sell literally nothing. I have no course, book, WhatsApp. I'll never follow you, DM you. I sell nothing. But only thing I do have is a YouTube channel. So if you want to help me out, subscribe to my YouTube channel. It's the best way to support me. And what else do I want to say? Yeah, definitely watch out for people impersonating me. We had to ban some people with my exact same name and profile picture. Yeah, I'll end this with a quick portfolio update. So here's my dividend-only portfolio. We're down 1.3% of the day. And of course, once I buy a stock in here, I legit, or, well, that's my other portfolio. Every stock in here legit pays a dividend. So most of these still are like dividend growth companies, like a Google has a small yield, Meta small yield, Constellation Energy small yield. But it's really the stock price appreciation that you're buying it for. And in 5 to 10 years from now, the dividend yield on cost will hopefully be really good. From 1 year ago exactly, we're up 15% in there, which does underperform the S&P. And we started our Roth IRA a year ago. We're down basically 3.6% all time in here. And here's our total percent change in all the stocks in here. HCA Healthcare has been our biggest loser, dragging down our portfolio. But InnoData, we're up 199% on them. And then we have, this is our Moomoo account, as I was showing. This is where once I buy a stock in here, I never sell it. We're down 3% on the day, but it's good we have some defensive names, or like a Coca-Cola Consolidated in a McDonald's. So where everything's red, at least we have some stocks that are green, you know, holding us up kind of. But yeah, so year to date, I really recommend, you know, when you're holding a great stock, never fully sell out of it. Even if it looks overbought and the valuation's high, just don't fully sell out of it because you never know what could happen. Some of my biggest regrets were selling out of great companies like Palantir at $10 and Robinhood at 30 and a lot of other stocks too, and SoFi too. So yeah, and then finally we have our Webull account. This is just my risk on account. It's down 4.4% of the day, 23% open profit and loss all time, and my largest holdings are at the top. So AMD is our largest holding, down 10% on the day. That's what's leading to most of this red. We got Futu, Microsoft, UiPath, Southern Company, Dave, Progressive, Uber, Reddit. AppLovin's a cool software company, and our most recent purchase, Netflix. So have a great rest of your day. Thanks again, Norbero, ZXC, Narc. Thanks, everyone. Please hit the like button, even if you haven't already. See you soon. Happy Friday. Have a great rest of your day. And again, watch out for scammers. I sell nothing for real. I have no course. I don't coach. I don't nothing.